Sir, very happy morning to all, happy evening to all, happy afternoon to all. We are going to solve computation of tax payable in our TT. My dear lovable students, if you see the structure of the TT paper, the first 14 to 15 mark will be from the computation of the tax payable. Computation of total income, which will come for 14 to 15 mark in exam. This is full syllabus in one question. You should know income from salary, income from house property, PGPP, capital gain and IFOS. Plus clubbing, set off carry forward, chapter 6A deduction. You will be getting the total income. And also you should know the tax rate both under the normal route and also the default tax regime. From the following information provided by Mr. Suresh, aged 43 years and a wholesale dealer, for assessment year 25-26, you are required to compute the tax payable by him. This is the objective of the subject DT to determine the tax payable of the assessee under both the route. So you can't say that I have not prepared this route, I'm strong in this route. That and all will not work for our subject. For our subject, you should have a proper knowledge of the entire sections. Trading and P&L account of Mr. Suresh has been given. Sales is 2 crore 62 lakh 50,100. Generally, my dear lovable students, if your turnover exceeds 2 crore, you are not entitled to travel through the presumptive tax route. Generally. But as per the amendment, up to 3 crores, you can travel through the presumptive tax route. If the receipts, cash receipts and cash payments are within 5%. Accepted? Sir, I just read the sales, but the immediately point connected to my brain is presumptive taxation. Like this, you also should be able to connect lot of provisions in the section. Closing stock, 52 lakh 100. Opening stock, purchases, direct expenses, freight inward, you will get the gross profit. The gross profit will be brought down to salaries and wages, general expenses, rates and taxes, interest paid on late filing of what? GST. I have not filed the GST on time. That means GSTR 1, GSTR 1A, GSTR 3B has not been filed on time. GST returns has not been filed on time. If there is any delay in filing GST return as an assessee, I am supposed to pay interest. That interest has been debited to P&L account. Income tax paid for financial year 23-24, 3,45,000 has been debited to P&L account. Interest paid to NBFC has been debited to P&L account. Depreciation has been debited to P&L account. These are the items debited to P&L account. Dividend from Indian company has been credited to P&L account. If this item should not be credited to what account? P&L account. If this is other head of income, I have to exclude from PGBP and should be included in the respective head. Interest if received on FD generally should be taxable under IFOS, but this has been credited to the P&L account, should be removed from the P&L account, should be shown under the head IFOS. Rent received should be taxable under the head IFHP, and income tax refund is 13,000. Right, sir? This following additional information, this much information has been given in the question. Read it very properly, understand each and every point. Following additional information is provided by him. Closing stock of previous year 24-25 was undervalued by 55,000. Sir, previous year 24-25. In tax, we are having previous year and assessment year. Which previous year they are talking? 24-25. Our year is also 24-25 because assessment year 25-26. So they are talking about this closing stock. This closing stock is having some problem. Closing stock is undervalued by 55,000. Right, sir? If closing stock is undervalued by 55,000, then profit will reduces or increase? Reduces. So we have to manually add to the net profit. Right, sir? Rates and taxes include 1,000 paid towards late filing of income tax return. For assessment year 24-25, under section 234F of the Income Tax Act. That means we have not filed the return on time. Since we have not filed the return on time, there is a interest we paid, late fee we paid under section 234F. That amount has been debited to P&L account. That is included in the rates and tax. Salary include 30,000 paid on single day by way of cash to his accountant. In a single day, to a single person, if you are paying cash in excess of 10,000, then it should be added back as per 40A subsection 3. Interest paid on loan of rupees 10 lakh taken from NBFC. That means from non-banking financial company, 10 lakh rupees loan you have taken. That is the interest paid. Out of the loan amount, rupees 2 lakh was used for what purpose? Personal purpose. Then as per 36, subsection 1, clause 3, the loan amount which has been used for personal purpose cannot be claimed as a deduction. And the balance was used for business purpose. No TDS was deducted while paying the interest on loan. An amount of 35,000 was paid by check during the year towards health insurance policy covering himself, his spouse and his children. 80D they are referring. General expense include advertisement expense of 25,000 paid by check towards an advertisement in a souvenir published by political party. 37 subsection 2B they are referring. Income tax refund include 2,500 towards interest. This interest should be taxable under the head IFOS. Depreciation charged as per the income tax rules is 2,20,000. So depreciation debited to P&L account should be added back. Advance tax paid 9 lakh. That means whatever ultimate tax liability is there, I paid some amount of advance tax that has to be reduced from the net tax payable. TDS has been deducted on interest received on FD. Turnover for the year 31/3/2024 last year is 2.58 crores. That means last year turnover is more than 1 crore. In case of individual or HUF, my dear lovable students, if the turnover in the immediately preceding previous year exceeds 1 crore, for hijack, TDS has to be deducted. Otherwise, no need to deduct the TDS for the hijack. Look, like this only a 15-mark opening question will be given in the exam. Being the first question of discussion out of 30 questions, we will be feeling little difficulty to connect the provision here and there. But I will tell you, once we cross 7 questions of discussion, you itself fall into the pattern of solving the computation of. It is my responsibility to make it clear computation of total income and ensure that 15 mark in exam. Pakka. What we are going to do is, in this question, we are going to know the way in which we are going to present the answer. Nothing more. Don't do self-evaluation. Whether I am able to connect the provisions, whether all the sections, whether you are knowing or not. Till 7 questions, don't do the self-evaluation. Computation of total income of Mr. Suresh. Always start with your answer of computation of total income. Hello, sir. How many heads of incomes are there? 5 heads of income. Write the format like income from salary, income from house property, PGBP, capital gain and IFRS. As we all know that if you add 5 heads of income, you will get the gross total income. You will get the, for every head, create a working note. For every head, create a working note. What are the 5 heads of income? Salary, house property, PGBP, capital gain, IFRS. In this question, there is no salary details. So just put a dash, no working note required. Sir, in this question, house property details are given. Sir, attach working note number 1. What happened to house property? House property income has been credited to P&L account. If you credit rent to the P&L account, PGBP increases. PGBP, do the rectification of errors. In the sense means, sir, because of crediting the rent in the P&L account, my PGBP increases. PGBP should not increase. So I should reduce the PGBP and I should increase the IFHP. Right? So show this 7,20,000 rupees rent as gross annual value. What value? So in the computation of income from house property, gross annual value, sir, 7,20,000. My dear lovable students, property may be self-occupied property or let-out property. If property is a self-occupied property, we will not receive rent at all. That should strike in your brain. That means property is a let-out property. That's why we have received the rent. In case of let-out property, my dear lovable students, it's a 5-step approach. It's a, sir, gross annual value less LT bar MT paid by the owner, net annual value, less deduction under section 24A, which is 30% of net annual value, less interest on borrowed capital. You will get the answer as income from house property, right? And this gross annual value is a three-step approach, which is, sir, fair rent or municipal value, whichever is higher. Whichever is higher or standard rent, whichever is lower. That answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is higher, right? But this much information has not been given in the only rent received 7,20,000 has been given. Pakka. So actual rent has been taken as the annual value due to absence of information related to expected rent in the question. Fair rent, municipal value not been given in the question. So I can't find out the expected rent. Since expected rent is not given in the question, actual rent received has been taken as the GAV. Accepted. Less, sir, actually LT bar MT paid by the owner. There is no LT bar MT given in the. So net annual value is 7,20,000. On this 7,20,000, I have to reduce 30%. So 7,20,000 into comes to 2,16,000. There is no IOBC details given in there. That's what income from house property, 5,04,000. I am attaching the answer, man. Income from house property, 5,04,000. Done. First head clear. I will tell you one thing. How to approach this 30 question. Don't find out answer for 30 question. Revise the subject tax with this 30 question. Then you can answer MCQ. You can answer the same head, income from what property? House property. You'll be feeling so much comfortable with the subject. It's our DT. Pakka. Coming to PGBP, man, the hero. Profits and gains of business or profession. Sir, can we start doing the PGBP working? Already net profit as per P&L account has been given in the question. Look at the net profit. 73,55,815. But this net profit contains so many impurities. Because unnecessary items has been debited to the P&L account. Should be added back. Unnecessary income has been credited to the P&L account. Should be reduced. I have to remove the impurities. And I have to find out the taxable PGBP. So add expenses or payment debited to P&L account but not allowed. But not allowed. These items are all debited to P&L account but should not be debited to and should be in the back. Added. Sir, depreciation as per books. Because as per books, I would have provided depreciation as per straight line method. Is straight line method allowed in direct tax? No. So the amount calculated as per the straight line method should not be debited to P&L account. Because in Income Tax Act, WDV method is allowed. Only for power sector undertaking. If they want, they can choose straight line method. Clarity? That means this 1,82,000 should be added back. 1,82,000 should be added. But the right method in the Income Tax Act is a WDV method. That means they themselves given in the question what is the amount of depreciation, sir, as per the WDV. That has to be reduced. Am I right, sir? Look, man, less depreciation as per income tax rules, 2,20,000. 2,20,000. Accepting? Sir, fee for late fee of filing the income tax return. Sir, for the income tax department, you paid late fee under section 234F, 234F. Look, man, this point very clearly analyzed. Don't find out the answer for this question. Learn the subject. Rates and taxes include how much? 1,000. That means rates and taxes, it is debited to P&L account. Look at the P&L account. Enjoy that. Rates and taxes 2,40,000. Inside this 2,40,000, how much is there? 1,000 is there. For what purpose that 1,000 has been paid? Towards late filing of his income tax return for the assessment year 24. Under section 234F of the Income Tax Act. Sir, this is a penalty. Since you have not filed the return within 139 subsection 1 time limit, you are liable to pay late fee under section 234F. penalty should not be debited to P&L account because it's infraction of law. Because it is as per section 37 general deduction, sir, expenditure should not be covered under 30 to 36. Expenditure should be revenue in nature. Expenditure should not be personal in nature. Expenditure should be incurred wholly and exclusively for the purpose of business or profession. Expenditure should not be infraction of law. This is an infraction of law. You have contravened the provisions of the law. For that you have paid what fee? Late fee. That means a penalty that has been debited to P&L account should be added back. Sir, if penalty is allowed as a deduction, automatically net profit as per P&L account will reduce. On reduced profit, if you pay tax, will department accept? No. Then what you will do, no, your marriage expense will also be debited to P&L account for the purpose of reducing the net profit. Is that acceptable? No, sir. This is infraction of law, contravention of law, debited to P&L account, should be added back. Hence, I am adding back 1,000. Accepted. Salary paid to an accountant in cash, it's a direct provision. Exceeding 10,000 rupees, disallowed under 40A subsection 3. That means what 40A subsection 3 is saying, that in a single day to a single person, if you make the payment in excess of 10,000, 100% of the expense debited to P&L account should be added back. How much amount, man? 30,000 should be added back. When you read the question itself, you would have find out that. Sir, interest paid to what? NBFC. Look, sir, on loan, which is used for what purpose? Personal. Sir, we are having section 36 subsection 1 clause 3. Pakka. Which is saying that interest on borrowed capital. If you are borrowing money and if you are using that money for the purpose of business or profession, any interest you are paying, if that interest has been debited to P&L account, will be allowed as a reduction. What is the total interest on capital debited to P&L account, man? Total interest on, sir, capital debited to P&L account is 1,15,000. This 1,15,000 by taking some loan. Are you all really with me? Come on, man. Interest paid on loan of how much lakh? Taken from NBFC. So, interest paid on loan of rupees 10 lakh. Taken from NBFC. Out of the loan amount of rupees how much lakh? 2 lakh was used for personal purpose. And balance was used for business purpose. So what is the total loan? 10 lakh. Personal purpose? 2 lakh. Business purpose? That means interest attributable to 8 lakh will be allowed as a reduction. Whereas interest attributable to 2 lakh will not be allowed as a reduction. Hello. And no TDS was deducted while paying the interest on loan. Sir, what is the total interest, sir? 1,15,000. That 1,15,000 should be classified into two categories. The interest attributable to 2 lakh, interest attributable to 10 lakh. Come on, man. 1,15,000 should be classified into two categories. Interest attributable to 2 lakh, interest attributable to 8 lakh. Accepted. So 1,15,000 into 2 lakhs divided by 10 lakh. Am I right with my calculation? So 1,15,000 into 2 lakh by 10 lakhs comes to 23,000 interest will not be allowed as a deduction, should be in the back. Because this interest is for personal purpose. The remaining, man, 1,15,000 minus 23,000 comes to 92,000 is the interest attributable to business purpose. But for this 92,000, no TDS has been deducted. Actually, as per section 194A, interest other than interest on securities. Interest other than interest on securities. If you are making or paying any interest, then you are liable to deduct what? TDS. But we are having exception under section 194A. What exception is saying that if you are interest paying to a bank or NBFC, no need to deduct TDS. Because anyway, that bank or NBFC will not hide their income. Because they are under RBI core banking solution. Then why are you deduct unnecessarily TDS? Because if you deduct TDS, the bank, what the interest they will be receiving will be less. then with that interest, they can't give loan to another person. So the operating activity of the bank will get disturbed. That's why they said that, sir, no need to deduct TDS. So interest paid to NBFC on loan, which is used for personal purpose, not allowed as deduction under section 37. Because in order to claim an expenditure as a deduction, expenditure should be incurred wholly and exclusively for the purpose of business or profession. Hence, 23,000 should be back. This 23,000 I have added back. Paka. Coming to the next one. Sir, interest paid to what? NBFC. On which tax is not deducted. That means this portion. Which portion? 92,000. Have you deducted TDS? Actually, you are liable to deduct TDS under 194A. Hello? But there are exceptions under section 194A. Clear? Now you understand, man, which disallows at the rate of how much percent? 30%. Sir, if I make any payment to a resident on which TDS is liable to be deducted, no TDS has been deducted, or deducted TDS has not been paid to the credit of the central government. Hello, sir? Then 30% of the expense debited to P&L account should be added back. Pakka? If I make any payment to a non-resident on which TDS is liable to be deducted, no TDS has been deducted, 100% of the expense debited to P&L account should be. Sir, you only said that if we make any interest to NBFC, no need to deduct. Come on, get the suspense. Sir, have you paid interest? 92,000 is for business purpose. Have you deduct TDS? No, sir. Under 40A subsection 1A. Come on. Sir, since Mr. Suresh turnover, is Suresh an individual? For the immediately preceding previous year, that is previous year 23-24, he exceeds how much crore? Then hijack will not be applicable. Hijacker will not be. What is the provision of hijacker? Revise with this question. Sir, in case if the assessee is individual or HUF. In case if the assessee is in the immediately preceding previous year, if the turnover does not exceed 1 crore, in the current previous year, no need to deduct TDS for 194H, 194I, 194J, 194A, 194C and 194R. That means for hijacker, no need to deduct TDS. Hello? That means, my dear lovable students, in this case, is the assessee individual? Yes, sir. In the immediately preceding previous year, is the turnover exceed 1 crore? Yes, sir. Then hijacker benefit will not be. That means is liable to deduct TDS under 194A. Accepting, sir? Sir, disallowance at 30% of the interest is attracted for non-deduction of TDS. So 92,000 into 30% comes to 27,600 should be added back. Are you accepting? Come on, man. Sir, income tax paid for financial year 23-24. I am calculating the correct net profit. After I calculate the correct net profit, I will calculate the tax payable. Sir, I am going to calculate the what payable? Tax payable. In that last year tax expense itself, you have debited to what account? P&L account. Should be back. Straight provision only. Sir, interest paid on late filing of what? GST is allowed since it is not for infraction of law, but it is compensatory in nature. Super, sir. If it is penalty, there was a delay in filing return. You paid late fee under section 234F. Any late fee under 234F debited to P&L account should be back, added back, because that was in the nature of penalty. That was in the nature of penalty. Hello, sir, I have to pay 10,000 rupees today, but I have not paid 10,000 rupees today. I paid that 10,000 after 4 days. So is there any delay in payment? For that, I paid 10,100. That 100 rupees I paid as interest. Interest is not infraction of law. Interest is not infraction of law. Since there is a delay in payment of money, hello, sir, I have compensated to you. That is allowed. Hence, no need to what back. So, 234 late fee, penalty and all debited to P&L account should be added back. Whereas, interest in delay should not be added back. Accepting, sir? Advertisement expense towards advertisement in a souvenir published by political party should be added back under section 37 subsection 2b, because this is not a business expenditure. You are contributing to a political party is not a business expenditure. You are entitled to claim deduction under 80 GGB or 80 GGC as the case may be. So first I will add back how much, man? 25,000, and I will claim it as a chapter 6A deduction. Hello sir, when I calculate the tax payable under the normal route. Hello sir. Okay sir, I'm continuing sir. At the appropriate time I will take care. Then add undervaluation of closing stock. Undervaluation of, sir, actually if the closing stock reduces, my dear lovable students, by closing stock, if closing stock value reduces, sir, profit reduces, gross profit reduces. If gross profit reduces, net profit reduces. Should not reduce, should manually add 55,000. Accept sir? That's it. I come up with the subtotal. That means I have taken care all the debit items of the P&L account. Now I am coming to the credit side of the P&L account. There were unnecessary credit. Income chargeable under other head and income not chargeable to tax but credited to P&L. Actually, other heads of income credited to P&L account. Because of crediting unnecessary item in the P&L account, my net profit as per P&L would have been increased. I have to eliminate from PGBP and tax it under the respective head of income. Accepted? Dividend from Indian company. Under which head it should be taxable? So remove from PGBP, tax it under interest on FD. Should be taxable under remove from PGBP, tax it under rent received. Remove from PGBP, tax it under IFHP. Income tax refund. Remove from PGBP, tax it under IFOS, only interest portion. Only interest portion. Only don't tax the principal amount, because, sir, this is what I paid to department. That money itself they are returning back. Will you pay again tax on it? No, sir. Why, sir? Why are you paying tax? Sir, if they gave something extra money, that is called as interest on income tax refund. That should be taxable under the head. You will be getting net PGBP amount, which is 52,54,415. Look, man, this is the answer. 52,54,415. Accepted? Look, repeat the procedure. I'm saying very slow, because since this is question number 1 for you, what I have done, I have taken net profit as per P&L. This is wrong net profit. I will be coming once again in opening stock. Any problem? No problem, sir. Purchases? No problem. Direct expense? No problem. Freight inward? No problem. Salaries and wages? No problem. General expense? No problem. Because these all are business expenditure, have to be debited to P&L. Already debited to P&L. Leave it. With regard to rates and tax, inside this 1,000 rupees was there, which is 230 for F. For what fee? Late fee. It's not interest. It's not interest. Interests are compensatory in nature. Late fees are penalty. Any penalty debited to P&L account should be. Hence, I have added back 1,000 rupees. Interest paid on late filing of GST. This is what paid? Interest paid. Interest is time value of money. It is allowed. Hence, no need of added back. Income tax paid. Sir, as per 40A clause 1, any income tax debited to P&L account should be added back. 40 small a series. Are you remembering? Interest paid to NBFC, 1,15,000. Out of this interest attributable to personal, 100% disallowance. Interest attributable to business. Since this assessee is an individual, since in the immediately preceding previous year, since the turnover exceeds 1 crore, hijacker benefit will not be available. He is supposed to deduct TDS under section 194A. Since no TDS has been deducted and the recipient is a resident, 30% of the expense debited to P&L account should be added back. Are you getting the flow? Depreciation should be added back, because this depreciation is depreciation as per books. I don't want depreciation as per books. I want depreciation as per Income Tax Act. It will be as per the WDV method. Add back this 1,82,000. Reduce the depreciation as per income tax rules 2,20,000. Right up. Sir, in this closing stock value is reduced. Sir, if you reduce the closing stock value, my dear lovable students, net profit reduces. To that extent should be back added. Dividend should be taxable under IFOS. Interest should be taxable under. Rent received should be taxable under. Sir, income tax refund should be taxable under IFOS. Only interest portion. Accepted? Purified PGBP, that much big P&L taken care. Hello, sir. If you see, there is no salary, house property taken care, PGBP also taken care, there is no capital gain. Hello, sir. Coming to IFOS, can we deal with IFOS now? Whatever income we have excluded from the PGBP, include in the IFOS. Hello. Dividend from Indian companies should be taxable under the head IFOS. Interest on FD, question is recognizing one thing. Question said that, look man, sir, TDS has been deducted on interest received on what? FD. Who gave the interest? Bank. So it's an expense for the bank. It's an income to the investor. So bank would have deducted TDS under section 194A. Interest other than interest on securities. Bank will be deducting TDS at the rate of 10%. TDS at the rate of? So I would have received only remaining. So I have to gross up. I have to what? Gross up. Look, net of TDS. So this 1,17,000 will be 90%. Right? This 1,19,000 will be how much percent? It's 1,17,000. So 1,17,000 divided by 90 into 100 since tax was deducted at source at the rate of. So the gross will be 1,30,000. Look, you understand one thing. 1,30,000 minus 1,17,000, right? Comes to 13,000. This much amount the bank has deducted TDS. From the total tax payable, finally this 13,000 should be reduced because advance tax I paid, TDS they deducted. Don't forget. Accepting? Don't worry. When you do in paper and pen, you will get a flow. Don't worry at all. Are you accepting? That's it, man. Then interest on income tax refund. Sir, in the P&L account, what is the point to be highlighted here? In the P&L account, I credited how much amount? 13,000. This is principal. Sir, inside this 13,000, sir, 2,500. Income tax refund include 2,500 towards interest. That means only 2,500 will be taxable under the head. That's what 2,500. Are you all really with me? That's it. This is what your IFOS. This is what your IFOS. So I have finalized the salary. Nothing. House property done. PGBP done. Capital gain nothing. IFOS done. Hello, sir. So I will be getting gross total income of 76,10,915. Can I proceed? Then root matter. Whether you are going to travel through the optional tax regime or default tax regime. If you are traveling through the default tax regime, you are entitled to claim Chapter 6A deduction. But, sir, optional tax regime. But if you are going to travel through the default tax regime, you are not, sir, entitled to travel through the Chapter 6A deduction. Hello, sir. First, come on, man. Can we finalize the Chapter 6A? Deduction under 80D. 80D. D stands for doctor. Medical insurance premium paid by check. Health insurance premium paid for self, spouse, and his children. Allowable as deduction. What is the age of the assessee given in the question? 43. That means normal person. Normal person means up to 25,000 is allowed. How much he paid? 35,000. Will be restricted to 25,000. Right? Next one, deduction under 80 GGC. Sir, something you have added back under 37 subsection 2B. Expenditure towards advertisement in a souvenir published by local political party. Local. Not allowable as a deduction. Because that political party should be a registered political party under the ROPA, which is nothing but Representation of People's Act. This condition is there under 80 GGC. Once you satisfy that condition, then only you are entitled to claim it as a local. Hello, sir. Sir, what they are saying is, now you go and read that, man. You will be having a catching word. Sir, general expense include advertisement of 25,000 paid by check towards advertisement in a souvenir political party by a local political party. Hello. Local, everyone will leave. And they will claim it as a deduction under 80 GGC. But you are not entitled since the political party is not a registered political party. Right, sir? That's it. Your total Chapter 6 deduction come to 25,000. 5,000. That's it. I'm proceeding, man. You will be getting taxable income 75 lakh 85,915, which will be round off to 75 lakh 85,920. That's it. Nearest 100, you should round off. Accepted? Now I have to calculate the tax payable, both under the default tax regime and optional tax regime. Right, sir? This is the computation of tax payable by Mr. Suresh. Sir, for assessment year 25-26, first I am calculating under the optional tax regime. That means I don't want the default tax regime. I am not traveling through 115 BAC. I am traveling through optional tax regime. Hello, sir. Up to 2.5 lakhs nil. That is a basic exemption limit. 2.5 lakhs to 5 lakh at the rate of 5%. That means gap of 2,50,000. For that 2,50,000, pay tax at the rate of 12,500. Sir, next one, slab 5 lakh to 10 lakh, gap of 5 lakh at the rate of 20% comes to 1 lakh. Then 75 lakh 85,920 minus 10 lakh comes to 65 lakh 85,920 at the rate of comes to 19 lakh 75,776, getting total tax payable under the optional tax regime. Hello. 20 lakh 88,276. Come on. Is the individual an assessee? Is the assessee an individual? Is the total income exceed 50 lakh? He is liable to pay surcharge at the rate of 10%. Right? Surcharge means what? Tax on tax. Surcharge means, so add surcharge at the rate of 10%. Since the income exceed how much lakh? 50 lakh. So on this apply 10%. Hello. So 20 lakh 88,276 plus 2 lakh 8,828. What is the subtotal you are getting? 22 lakh 97,010 into 4% health and education says. What is the 4%? 91,884. Accepting. Total tax liabilities 23 lakh 88,988. Have I paid any advance tax? That means already I paid some taxes advance. Reduce it. Sir, have someone deducted TDS? Reduce it. You will be getting, man, 14 lakh 75,990 is the tax payable under the optional tax regime. Clarity? No. I want to travel through the... Then, if you are traveling through the default tax regime, you are not entitled to claim Chapter 6A deduction. Then don't take total income. Take the gross total income. What is the gross total income? 76 lakh 10,915. Right? Because under the default tax regime, deduction under 10AA or deduction under Chapter 6A will not be allowed. Paka. So what will be the total income as per 115 BAC? 76 lakh 10,915. The way of default tax regime is less deduction, less tax. Correct? Sir, total income as per 115 BAC 76 lakh 10,920. I round off to nearest 10. Can I start? Up to 3 lakh, no need to pay any tax. 3 lakh to 7 lakh, gap 4 lakh at the rate of 5%, 20,000. 7 lakh to 10 lakh, 3 lakh into gap 3 lakh. Into how much percent? Come to 10,000. 10 lakhs to 12 lakh, 2 lakh at the rate of 15% comes to 30,000. 12 lakhs to 15 lakh, gap 3 lakh at the rate of 20%. More than 15 lakh, sir, 30%. Slab clear? Tell me, sir, we are having two options. Number one, default tax regime, optional tax regime. Default tax regime, sir, 0 to 3 lakh, 3 lakh to 7 lakh, 7 lakh to 10 lakh, 10 lakh to 12 lakh, 12 lakh to 15 lakh, above 15 lakhs. What tax regime? Optional tax regime. Sir, up to 2.5 lakhs nil, 2.5 lakhs to 5 lakh, 5 lakhs to 10 lakh, 10 lakhs to more than 10 lakhs. That's it, game over. Pakka? Sir, you will be getting subtotal. 19 lakh 73,276. Is the assessee individual? Is total income exceed 50 lakh? Is liable to pay surcharge at the rate of? Since the total income exceeds 50 lakh, on this you have to apply 10%. On both, you have to apply health and education cess of. You will be getting total tax payable. Reduce the advance tax. Reduce the TDS. You will get the total tax liability. Round off to nearest of 10. 13 lakh, 44,430. Here 14 lakh, here only 13 lakh, which is beneficial. Default tax regime, since the tax liability as per 115 BAC is lower than the tax liability under the normal provisions of the Act, it is beneficial for Mr. Suresh to exercise option under 115 BAC. He want to exercise this option on or before the due date for furnishing the return of income. Before filing the return of income, you have to choose this. Further, he is having income from what or what? Business or profession during previous year 24-25. Sir, in our year, is he having PGP? During 24-25, in our year, is he having PGP? If we opt for 115 BAC for this previous year, said provisions would apply for subsequent year as well. That means you have to check that. In current year, assessee is having PGBP or not. If he is having PGBP and he selected default tax regime, lifelong default tax regime will be applicable. If current year I don't have PGBP, still I choose default tax regime. Every year I have to choose default tax regime. There will be a game between default versus optional tax regime. Are you comfortable? A very big question has been dealt, man. I can guarantee you that out of 30 questions, if we do 7 questions, the game will start change for the computation of total income. That guarantee I can give. But those who are in face-to-face, in virtual, in YouTube, what they will do, I will tell you. They will vouch the question, saying that, okay, this figure came there, that figure came here. Then this student gone there and this student next attempt. Don't do that. You are having the leverage of doing that after 10 questions. At least first 10 question, don't do, sir, auditing. Do sit and solve this question. First 10 question. Next remaining time shortage is there. Then we can do audit. Okay, fine. This question, this adjustment, this question, this adjustment. Right, sir. If you do that for the first 10 question, then you will be in a big trouble. And it's my guarantee this time, I will do 30 questions for you. And we are going to get the first 15 mark computation of the total income in direct tax. Are you all with me? I am with you, sir, from your heart. Anybody is there? Where is a grand clap? Sit and solve this question. Update me. You have completed. We will proceed into the next question out of 30 questions. Sir, very happy morning to all. Happy afternoon to all and happy evening to all, my dear lovable students. So we are doing computation of tax payable. In that we have solved one question. We are moving into the second question of how to solve a computation of total income. Sir, this is a receipts and payments question, my dear lovable students, with sufficient other information are there. This question has been there in MTP March 2021 and this is a past examination May 2019 question. So this is how in exam a 14 mark question will be tested. Come on. You are required to compute the total income. Okay, fine. That is the objective of this subject itself. And tax liability of Mr. Amar, aged 58 years. So, the assessee's name is Amar. Age is very important. Aged 58 years. A resident individual. Fine. Mr. Amar is an advocate and furnishes you the receipts and payments account for the year 24-25. Receipts and payments account. Cash account has been given in the question. Question number 1 we have done from P&L aspect. Question number 2 we are doing from receipts and payments account. Sir, opening balance, that is opening cash and bank, 80,000 rupees cash was there. This is not at all an income. This is an asset. Fees from legal services is an income to the advocate. Motor car loan is a capital receipt, not a revenue receipt. This is a capital receipt. From SBI at 12% per annum interest. You are not liable to pay income tax for the loan taken. Only for the income you are liable to pay the tax. Sales receipt of 5,800 listed equity share sold on 31st March 2025. That means this is a capital asset. By selling capital asset, you have received 5,95,000. So in this question, we will be having PGBP and we will be having capital gain. These are the payment, staff salary, bonus to clerk, my dear lovable students, general business expenditure, Other general and administrative expense, general business expenditure, office rent allowed, life insurance premium. Life insurance premium is not a business expenditure, it's a personal expenditure. But you are entitled to claim deduction under 80C. Sum assured is 5 lakh. Yes, sir. 5 lakh into 10% will be maximum allowed as a deduction. Motor car is a capital expenditure acquired in Jan 2025 by way of NEFT. That means motor car has not been acquired by way of cash. It is acquired by way of account pay check or bank draft or electronic clearing system or such other electronic mode as may be prescribed. The cost of motor car cannot be taken as a deduction, whereas depreciation on motor car under section 32 can be claimed as a deduction. Books bought by way of account pay check. For books, 40% depreciation will be allowable as per the PGBP. In the month of May, June and September, which are annual publication. Whether it is annual publication or other than annual publication, the maximum rate of depreciation under PGBP will be 40%. Computer acquired, again 40%. On 1/11/2024 professional use, payment made by account pay check, even for computer also we are supposed to calculate the depreciation. Domestic drawings is not at all an expenditure. It is personal expenditure, will not be allowed as a deduction. Motor car maintenance will be allowed as a deduction. Sir, contribution to PPF, you are entitled to claim deduction under 80C provided if you are traveling through the optional tax regime. Closing cash balance is an asset. It is neither income, so will not be taken into account. These are the other information. Sir, listed equity share on which STT was paid, security transaction tax was paid, were acquired in August 2016 for 1,21,800. This is the cost of acquisition of the listed equity shares. The fair market value of such share on 31st January 2018 and on 1st April 2018 were 75 per share and 85 per share respectively. 2 fair market value has been given. Sir, this has been acquired in August 2016. Sir, we all know that listed equity shares are super asset for which provisions of 112A will be applicable. If you are acquiring the listed equity shares before cutoff date, then you can take the fair market value as on cutoff date as the cost of acquisition. Right, sir? Coming to motor car. Motor car was put to use for both official and personal purpose. That means section 38, asset used for both business and personal, will be applicable for the motor car. 1/3 of the motor car is for personal use. So 1/3 of depreciation, 1/3 of motor car expenses, 1/3 of petrol expenses, 1/3 of every expenses relating to motor car should be added back. Right? Or will not be considered as an expense for the purpose of PGBP. No interest on car loan was paid during the previous year 24-25. We have not paid interest because in the receipt side of the receipts and payments account, they have given loan taken at the rate of how much percent per annum? 12%. But no interest has been paid. That's why it is not there in the payment side. Mr. Amar purchased a flat at Kanpur. Flat is a capital asset for rupees 35 lakh in July 2016. Cost of which was partly financed by a loan from Punjab National Housing Finance Limited of rupees how much lakh? 25 lakh. His own saving 10 lakh, 21 lakh and deposit from Repco Bank 9 lakh. So 1 lakhs plus 9, 10 lakhs. 10 lakhs plus 25 lakh. That's why 35 lakhs is matching. Accepting? The flat was given to Repco Bank on lease for 10 years at the rate of rupees 35,000 rupees per month. That means income from house property they are talking about. Following particulars are relevant. Municipal tax paid by Amar 8,200 per annum less LT bar MT paid by the owner can be claimed as a deduction. House insurance will not be allowed as deduction. That's why we are getting ad hoc deduction at the rate of 30% under section 24A. As per interest certificate issued by Punjab National Housing Finance Limited for the year 24-25, he paid 1,80,000 towards principal. That can be claimed as deduction under 80C if you are traveling through the optional tax regime. And 2,01,500 as interest. My dear lovable students, since the property is a let out property, sir, you can claim deduction under 24B, sir, unlimited. What man? Unlimited. If you are traveling through the optional tax regime, right, sir? Sir, even under default tax regime also this is possible, because restriction is applicable only for the self-occupied property, not to the let-out property. He earned 1,20,000 in share speculation business and lost 1,80,000 in commodity speculation business. That means 1,20,000 is income, 1,80,000 is loss. Mr. Amar received a gift of 21,000 each. So 21,000 each from 4 of his family friends. Family friends are not relative. So 21,000 into 4, total 84,000. Since the aggregate amount exceed 50,000, that 84,000 will be taxable under the head IFRS. He contributed 1,21,000 to PM Care Fund by way of bank draft. In the sense means 80G they are talking about. If you are contributing to PM Care Fund, you are entitled to get deduction under 80G. He donated to a registered political party, not local political party, registered political. 3,50,000 by way of check. You are entitled to get deduction under 80GGB or 80GGC as the case may be. If the contributor is a company, 80GGB. Other than company, 80GGC. He follows cash system of accounting, fine. It is his option. It is allowed. Cost inflation index CII for the capital gain computation has been given. But if the transfer is after cutoff date, then benefit of indexation is not available. Assume Mr. Amar is not willing to opt for provisions of 115 BAC. That means we are supposed to calculate the answer only in one route. That is optional tax regime. He don't want to travel. He will not be opt for 115 BAC. So will not be opt for 115 BAC in the sense means he don't want to travel through the default tax regime. He want to travel through the optional tax. I will tell you, man, being a second question, it will be little better than first question. So many points will be able to connect. I will tell you, till 7 question, you don't evaluate yourself. You don't evaluate yourself. Get the format. Get the format. Understand the procedure. Then from 8th question onwards, you start evaluate. You will be feeling very level clarity. I am personally, sir, responsible for that. Can we start the proceedings? Computation of total income of Mr. Amar is what we are going to calculate. Is there any salary information given? Still you write income from salary, put a dash. Hello, sir. Income from house property. Is there any IFHB details given? Yes, sir. Sir, can we calculate income from house property? Actually, Amar bought some flat and it has been let out for lease for a rent of 35,000 per month. So 35,000 into 12 comes to 4,20,000 is the gross annual value. Right, sir? And LT bar MT has been paid by Amar. That can be claimed as a, in question, you have to check that whether LT bar MT has been paid by the owner or by the tenant. In this question, since it has been paid by the owner, owner is entitled for deduction. Studied. So I will be getting NAV of 4,11,800. On that 4,11,800, apply 30%, which is 4,11,800 into 30% comes to 1,23,540. Less deduction under 24B, interest on loan, which is already given in the question, 2,01,500. You will be getting income from house property of 86,760. Accepted? Sir, nothing. I am uploading the answer, 86,750. Just recall, man, is the property self-occupied property, let-out property? Let-out property is a 5-step approach. Gross annual value, less LT bar MT paid by the owner. Net annual value, less deduction under section 24A, less deduction under section 24B. You will get the answer as income from house property, right? That's it, game over. Sir, is there any profits and gains of business or profession? PGBP will be computed in 2 ways. Number 1, cash system, that is, sorry, P&L account and receipts and payments account. Is this P&L account or receipts and payments account? Receipts and payments account. If it is receipts and payments account, take the relevant receipt minus relevant payment. What is the rule? Relevant receipt minus relevant payment will give you profits and gains of business or profession. Go and check the, sir, your cash account, man. In your cash account, loan received. Sir, is it PGBP income? No, don't take this loan. Sale of capital asset. Is it PGBP income? No. Sir, cash balance. Is this PGBP? No, it's an asset. So what is the only relevant income? 49,60,000. Take only relevant item. That's what they have done. Sir, fees from legal is 49,60,000. On the payment side of the receipts and payments account, so many payments will be there. Consider only the relevant payments. Accepting? Sir, I'm not going every time going back. I will be attaching with the answer. I hope that you will be able to appreciate or understand. Expense allowable as what? Deduction. Staff, salary and bonus. You tell me, is it an expense relating to business? It will be allowed as a reduction. Reduce it, man. Other general and administrative expense. Is it an expense relating to business? Reduce it, man. Office rent will be allowed as a reduce it, man. Motor car maintenance is there, but that motor car has not been fully used for business purpose. It is partly for business and partly for personal. Technically, section 38 will be applicable. Technically, section 38 will be applicable. What section 38 is saying that if an asset has been used for partly for business and partly for personal, the expense attributable to personal will not be allowed as a deduction. That means expense attributable to business will be allowed as a deduction. Are you really with me? What is the total expense incurred? 72,000. The car, 1/3 has been used for personal. That means 2/3 has been used for business. So 72,000 into 2/3 comes to 48,000. Right, sir? Sir, since a car loan, interest is not allowable. Because question specifically said that Mr. Amar is following what system? Cash system. That means he is not following accrual system. So in cash system, if expense has not been paid, cannot be claimed as a deduction. Hello, sir. So that's why, sir, since Mr. Amar follows cash system of accounting and no interest has been paid during our financial year, nothing will be allowed as a deduction, right? So many capital assets has been purchased. For that capital expenditure will not be allowed as a deduction. Whereas, my dear lovable students, depreciation will be allowed as a deduction. Am I right? First one, motor car. You have to check the question and tell me what is the value of motor car. 9,50,000. Let me ask you a question. Is the motor car purchased by cash or account pay check? Basically, specified mode. Sir, if you are purchasing an asset in specified mode, then only you are entitled to claim deduction or depreciation under section 32. Am I right? What is the date of purchase of motor car? Jan 2025. Are you all really with me? That means the motor car has been put to use for less than 180 days. The motor car is entitled only half the rate of depreciation. Am I right? So 9,50,000 into 15% into 50%. Right, sir? But are you using the entire motor car for business? Only 2/3. So 2/3 being put to use for, sir, it is less than 180 days. 47,500 is the eligible depreciation. Settled? Books. Sir, books being what publication? Annual publication. Nothing. 100% of the books has been used for business only. Don't apply section 38. What is the value of books? 80,000. Into how much percent? 40%. Sir, is the books more than 180 days? Less than 180 days? More than 180 days. That's why 32,000. Can I proceed? Computer, the general rate of depreciation for computer is 40%. What is the value cost? 52,000. Have you purchased by specified mode? Yes, sir. Is it more than 180 days or less than 180 days? Less than 180 days. You are entitled to claim only half the rate. So 52,000 into 50%. Since the same is put to use for less than 180 days. So this is the eligible depreciation. So the PGBP will be 7,24,100. Accepting? That means what I have done, they have given cash account. Relevant cash received minus relevant cash payment. Right, sir? Sir, you said that you are following cash system. Then why are you reducing depreciation, sir? Depreciation is the non-cash item, sir. Sir, expense what I have paid, income what I have received, that I will be considering in cash. But here, my intention is to find out the taxable profit. If I have not used motor car, if I not use books, if I not use computer, I will not be able to generate the income. So this is not payable to anyone. Is this payable to anyone? Is depreciation payable like interest payable? Interest payable I have not reduced because I am following cash system. Depreciation already incurred expense as cash, but I am amortizing that expenditure, or I am depreciating that expenditure over the life of the asset. That has to be debited to P&L account or should be reduced from the taxable income. That's why I reduced that. So my PGBP is 7,24,100. Right? Sir, what Amar is doing? Advocate. Is advocate a profession? Yes, sir. Law, medicine, accountancy, architecture, interior decorators, technical consultancy, authorized representative, film artist, IT professional, company secretary, engineers, or any other professionals as may be notified by the central government. Those people are entitled to travel through presumptive taxation under section 44A(DA). But in order to enjoy 44A(DA), sir, the professional's turnover should not exceed 50 lakh. Should not exceed. Sir, for the previous year 24-25, gross receipts of Amar is 49,60,000, which is less than 50 lakhs. Since it does not exceed 50 lakh, he is eligible to opt for presumptive taxation scheme under section 44A(DA). In such a case, his professional income would be, sir, 49,50,000 into how much percent? 50% comes to 24,80,000, being 50% of 49,60,000. Accepting? Sir, it is more beneficial to Amar to declare a profit of 7,24,100 because if you are traveling through presumptive taxation, you have to declare 24,80,000. Hello, sir. As per the books of accounts, which is lower than the profit computer on what basis? Presumptive basis. Under what section? 44A(DA). However, for declaring lower profit, compulsorily he is supposed to maintain books of accounts under section 44AA. And he has to get it audited under section 44AB. These are the prerequisites to travel through normal route by skipping the presumptive route. Question nowhere said to compare the income with the presumptive income. Sir, you should be able to connect that. Okay, this guy is an advocate. Advocate means law. For law people, provisions of presumptive taxation will be applicable. To apply 44A(DA), turnover should not exceed 50 lakh. Since it is less than 50 lakhs, he can travel through presumptive taxation if it is beneficial to him. So turnover into 50% is a presumptive income to be declared. That means if you apply like that, it will come to 24,80,000. Are you all really with me? 24,80,000. But if I maintain proper books of accounts, my total income comes to only 7,24,100. It is beneficial to me. That means I'm skipping presumptive route. I'm traveling through the normal provisions. If I want to travel through the normal provisions, I have to compulsory liable to maintain books of accounts under section 44AA, and I am compulsory liable to do tax audit under section 44AB. That means for this guy, mandatory liable to maintain books of accounts, mandatory liable to do tax audit. I am coming to the income from share speculation business, the other business income. You are having one income and other loss. Income from share speculation business is 1,20,000. Less loss from commodity speculation business. Sir, set off against income from share speculation business. As we all know that speculation business income and you are having speculation business loss. Speculation business loss can be set off only against speculative business income. Actually, what is the total loss in the question? 1,80,000. But I'm having speculation business income of 20,000. Extra 60,000 has to be carried forward. Sir, even though here I am having 7,24,100, I can't set off because that income is not speculative business income. That is normal business income. Speculative business loss can be set off only against speculative business income. That means extra 60,000 should be carry forward. Carry forward. Are you all really with me? That too, if an assessee has incurred any loss under section 72, under section 73, under section 73A, and under section 74 and 74A, if he want to carry forward that loss, he has to file the return of income within the time limit specified under 139 subsection 3. The time limit of 139 subsection 3 is same of 139 subsection 1. Here you can connect this point also if you need. I'm coming to the capital gain, man. That's it. I have finalized PGBP. 7,24,100 is the PGBP. Accepted. Coming to the capital gain, the next hit. Actually, the assessee has sold listed share. Listed share is super asset under section 112, right, sir? Sir, if you sold listed share, how much listed share? 5,800 listed shares. 5,800 listed shares. For how much rupees it has been sold? What is the full value of consideration? 5,95,000. They themselves given that by selling the listed shares, we got 5,95,000. The sale received, we can take it as full value of consideration, right? Less expenses for transfer. There is no expenses for transfer has been given in the question. So the net consideration will be 5,95,000. Since the asset is listed equity share, proviso 3 to section 48 will be applicable. What proviso number 3 is saying that when you are calculating the capital gain for listed share, proviso number 1 and proviso number 2 will not be applicable. Proviso number 1 anyway will be applicable only to non-resident. Proviso number 2 is benefit of indexation. That means for a listed share, benefit of indexation will not be applicable. So even though the asset is a long-term capital asset, don't take the benefit of indexation. Accept it. Sir, and if you are acquiring a listed share before, sir, the amendment date, what is the amendment date? When they have acquired? 2016. What is the relevant date for, sir, the listed share? 31st January 2018. 31st January 2018 is the relevant cutoff date for the listed share. Sir, at that time, what was the fair market value? 75 per share was the fair market value. How much listed shares was there? 5,800. So 5,800 into 75 comes to 4 lakh. That's how this 4,35,000 have came. Sir, how many share? Tell me. 5,800 shares. Sir, you have to take the cost of acquisition as 75 per share. What is the provision saying? Sir, if you are purchasing any listed share, my dear lovable students, before the date, the relevant date is 31/1/2018, right? When they really purchased, August 2016. Sir, how much they paid? 1,21,800 is the real cost of acquisition. Is there? But the fair market value as on 31/1/2018 is how much? 75 per share. So 75 into 5,800 comes to 4,35,000. Accepting. After they purchased on August 16, sir, they have not sold on 31/1/2018. They have sold on our financial year. Accepting. They sold on our financial year for how much? 5,95,000. This is what the full value of consideration, right? So the cost of acquisition is equal to, sir, full value of consideration or fair market value as on 31/1/2018. 31/1/2018. Whichever is lower. Whichever is lower. That means 5,95,000 or 4,35,000, whichever is lower, comes to 4,35,000. Accepted. Sir, 4,35,000 or actual cost of acquisition, whichever is higher. That means 4,35,000 or 1,21,800, whichever is higher, comes to 4,35,000. This is how they have reached this 4,35,000. Accepted? So you will be getting long-term capital gain. Sir, you are saying that long-term capital gain, but I have not indexed at all. My dear lovable students, for a listed share, benefit of indexation will not be applicable. So 1,60,000 rupees is the long-term capital gain. They have given cost of acquisition is higher of either actual cost of acquisition, lower of 4,35,000 being fair market value and 5,95,000 being full value of consideration on transfer. They have written as either full value of consideration or fair market value, whichever is lower. Whichever is lower, or actual cost of acquisition, whichever is higher. Already I derived that figure. So you will be getting long-term capital gain of 1,60,000. Accepted, sir. Sir, can I come and do IFOS, sir? Salary nothing, house property dealt, PGBP done, capital gain done. Can I come to IFOS? Income from other sources. Hey, Amar has received cash gift of 21,000 from 4 people. Total comes to 84,000. Since the aggregate amount of cash received during a previous year exceeds rupees 50,000, then the entire amount is taxable. So the IFOS comes to 84,000. Are you all really with me? That will be taxable under IFOS. I will be getting gross total income. Is Amar traveling through default tax regime or optional tax regime? Hence, he is entitled to travel through Chapter 6A deduction. Can I finalize Chapter 6A? I am coming to Chapter 6A, man. So many deductions are there. Deduction under what C? 80C. Sir, if you are contributing to life insurance premium, let me ask you a question. What is the sum assured in that question? 5 lakh. The maximum deduction under 80C is 10%. So 5 lakh into 10% comes to 50,000. Or amount really contributed is 49,000. Whichever is lower, can we claim it as a deduction? Right? Sir, repayment of housing loan. Is there any principal portion is there? How much principal portion? 1,80,000. That can we claim it as deduction under 80C. Sir, have Amar subscribed to PPF? Yes, sir. How much PPF? 1,50,000. Are you really with me? Yes, sir. Sir, under 80C, the maximum deduction allowable will be 1,50,000. That's why all the amount restricted to 1,50,000. Pakka? Come on, man. Next one. Deduction under 80G. Sir, have Amar contribute to PM Care Fund? PM. Sir, PM means Prime Minister. Who's the Prime Minister of India now? Narendra Modi. Sir, for Narendra Modi, it is not 50%, it is 100%. BJP means 100%. Congress means 50%. Jawaharlal Nehru 50%. Hello, sir. So, 1,21,000 into 100% comes to 1,21,000 is the deduction under 80G. Sir, have Amar contribute to a registered political party? In last question, it was local political party. But this is registered by way of check 3,50,000. So the total deduction under Chapter 6A is 6,21,000. My dear lovable students, we all know that 80C plus 80CCC plus 80CCD subsection 1 is equal to 80CCE is equal to 1,50,000. Accepting. Sir, here only 80C will come in the limit. That's why it has restricted to 1,50,000. And 80G and 80GGC are outside the scope of 80CCE. Hence, this guy is entitled to claim 6,21,000 rupees as Chapter 6A deduction. So, the taxable income will be 4,33,860. Up to this pakka. Now, I have to calculate the tax payable. Sir, question specifically said that he is not interested to travel through the default tax regime. He is going to travel through the optional tax regime. Sir, if he is going to travel through the optional tax regime, I have to split the total income into special income and other than special income. Is there special income? Yes. He is having long-term capital gain. He is having long-term capital gain. Long-term capital gain covered under 112A. Hello, sir. So for that, tax is liable to be paid at the rate of 10%. 10%. On long-term capital gain exceeding 1,25,000. What is the total long-term capital gain? 1,60,000. As we all know that for that up to 1,25,000 you are not liable to pay tax. You are not liable to pay So from 1 lakh, how much? 60,000 minus 1,25,000. It's like a basic exemption limit for 112A. What is extra? 35,000. Right, sir? Yes, sir. Into how much percent? 10% is a rate. But when that, sir, sale has been happened, when that sale has been happened, 31st March, right? Then it is not 10%. It has to be written as 12.5% tax rate for capital gain. So calculator man, sir, 35,000 into 12.5% comes to 4,375. Sir, as it is made after 23/7/2024. 23/7/2024 is the cutoff date for capital gain. Since you have sold the capital asset after cutoff date, under section 112A, up to 1,25,000 rupees is exempted. In excess of that, you are liable to pay tax at the rate of 12.5%. So the rate should not be 10. Intentionally writing it is 12.5%. So out of 4,33,860, if the special income is 1,60,000, hello sir. So calculator 4,33,860 minus 1,60,000 comes to 2,73,860. On this 2,73,860, we can apply basic exemption limit. Are you really with me? What is this guy's age? 58, less than 60. And he want to travel through the optional tax regime. Applicable basic exemption limit is 2.5 lakhs. Are you all really with me? So 2,73,860 minus 2,50,000 comes to 23,860 into 5% is applicable tax rate. So 1,193. Am I right, sir? Are you all really with me? Come on, man. What is the taxable income of this guy? 4,33,860. Is this guy a resident? That means this guy is a resident and total income does not exceed 5 lakh. Then he is entitled to claim rebate under section 87A. Since the total income does not exceed 5 lakh, rebate under 87A is, sir, available. It is available. Hello, sir. But rebate under section 87A is not available for 112A. Because for 112A, long-term capital gain, already 1,25,000 benefit given. That too we are going to tax at 12.5%. Again, if you claim rebate under 87A, what government will get? Hello, sir. So government logically said that rebate under 87A will not be available for 112A. Hello. Because its rebate is 1,25,000. Don't claim again rebate under 87A. Accepted. Sir, exam, if I forgot, nothing. Here also A is there, here also A is there. We don't like A. Hello, sir. 87A said that I don't like 112A. Hello, sir. So, the maximum rebate you are entitled to enjoy under 87A is 1193. That means this 4375 you are mandatory liable to pay it as tax. So, 4375 into 4% comes to 175. The total tax liability will be 4,200. 550, yeah? This is a 4,550 is the total tax liability, my dear lovable students. Are you all really with me? That's it. One question, how many provision? One question, how many connection? This is what computation of total income or tax payable is all about, my dear lovable students. What you are supposed to do. Sir, do you want that 15 mark in exam? I will tell you the process. First point number 1. Till you solve 7 question to 10 question, don't self-evaluate yourself. Sir, till yesterday, we have not started doing this. But for last 2 days, we are doing this. That itself is a great achievement. In my life, I am doing computation of tax payable. Wow! That mental satisfaction should be there. My dear lovable students, number 2, revise question number 1. Once again, you will get lot of control. Redo question number 2, you will be doing mistake. When I do question number 3, revise 1 and 2 and do question number 3. Like that, if you are doing on a cumulative basis, trust me, after a certain point of time, basically after 7 to 10 question, you itself say that this is the adjustment I'm supposed to do, my dear lovable students. There is no doubt about it. Or you start feeling a 10 to 20% comfortable in this topic. Sir, I am with you, sir, from your heart. Anybody is there? Where is the grand clap? Sir, very, very, very happy morning to all, happy afternoon to all, and happy evening to all. So we are doing computation of total income, my dear lovable students. In that 2 question we have solved, this is the 3rd question from the list of doing. Sir, Miss P, aged 55 years, age is relevant in the subject, is a chartered accountant in practice. That means service provider. She maintains her accounts on cash basis that are allowed under PGBP. An assessee can maintain either under cash system or accrual system of accounting. Her income and expenditure account for the year ended 31st March are as follows. You itself tell me, if you become CA, you will be having audit fee, you will be having taxation service fee, consultants fee. These all are PGBP income. It has to be credited to the P&L account. Instead of P&L account, they have given income and expenditure account. Let it be there. All the expenditure will be debited to P&L account and all the income will be credited to P&L account. Right, sir? Yes, dividend on shares of X Limited. This is an impurity. This income should be taxable under the head IFOS. This should not be credited to the P&L account, rather income and expenditure account. But they have wrongly credited. Because of this, the consequences will be net profit will be higher. So I have to eliminate it from the PGBP and I have to show it under the head IFOS. Income from UTI, again, this is an impurity. This has to be removed from the PGBP and it has to be shown it under the head IFOS. Honorarium received from various institutions for valuation of answer paper. You tell me, after you studied this much, after you become chartered accountant, are you going to correct the paper? That means your job is not to correct the paper. So this income will not be taxable under the head PGBP, can be taxable under the head IFOS. But even I am also a chartered accountant. But for me, correcting paper, sir, conducting paper, conducting test, taking class is the main thing. So for me, teaching income is the business income, PGBP income. Right, sir? But this guy is having 27,88,000 from audit, sir, and 15,40,000 and 12,70,000. That means 55,98,000 as compared to that income. This is very nominal income. So this is not PGBP income. This is an impurity. Remove from the PGBP and tax it under the head IFOS. Rent received, residential flat let out. This is IFHP. So this is an impurity for PGBP. Remove it from the PGBP. Tax it under the head IFHP. When you are taxing this under the head IFHP, don't forget to reduce 30% standard deduction. Right, sir? That's it. I have scrutinized the credit side of the P&L account. Coming to the debit side, salary to staff, business expenditure. Stipend to article, please give more, business expenditure. Incentive to article assistants, very happy, please give more, business expenditure. Office rent, business expenditure. Printing and stationery, business expenditure. Meeting, eating, seminar and conference, business expenditure. Purchase of car is a capital expenditure. For that car, we cannot claim it as deduction. But depreciation on car can be claimed as deduction under section 32. Repair and maintenance of petrol or car, this is related expenses. You have to check in the question that whether 100% of the car are using for the purpose of business or profession. If 100% of the car is using for business or profession, 100% of the expenses can be claimed as a deduction. Otherwise, section 38 will be applicable. Asset used for both business and personal. Only the proportionate expenses will be allowed as a deduction. Traveling expenses, nothing mentioned. We have to assume that traveling expense is for in the course or furtherance of business. Municipal tax paid in respect of house property. This is an impurity regarding PGBP. This should not be debited to P&L account, should be added back. And it can be reduced under the head income from house property less LT bar MT paid by the owner. Are you all really with me? So I will start with net profit. I will remove all the impurities which has been credited in the credit side of the P&L by reducing, and I will add back the impurities which has been debited in the P&L to purify the head profits and gains of business or profession. Easy? allowable rate of depreciation on motor car is 15%. So on that 15%, I will be claim it as depreciation under section 32. Value of benefits derived from client during the course of profession is 10,500. There is a section called as section 28 charging section. For example, there is a doctor. Doctor is doing an operation. And sir, that doctor has done an operation for a very loved or the passionate person. Hello, sir. That operation success. Patient died. That's what you want. Okay. Sir, you are also saying to the doctor that, sir, I'm waiting for this to happen for very long years. But this is not happening. Sir, because of you, we have achieved this. Our entire family is very happy. So keep this watch worth rupees 1 lakh. So doctor is getting a watch. Hello, sir. Why the doctor has got some gift? He got the gift because of the business or profession. Because of the business or profession. That will not be taxable under the head IFOS under section 56 subsection 2 class 10. It should be taxable under the head PGBP under section 28. Are you all really with me? Tomorrow, sir, will you become chartered accountant? After you become chartered accountant, you are offering me BMW or Audi. Hello, sir. Because that much money will be there with you. You are giving me a BMW or Audi. That will not be that will not be taxable under the head IFOS. That will be taxable under the head PGB. Because I am receiving a gift or benefit, my dear lovable students, gift or benefit under the head PGBP. So someone gave me gift or benefit. Is the amount of gift or benefit is more than 20,000? No. If it is more than 20,000, TDS has to be deducted under 194R perquisite. Are you all really with me? Since the amount of gift is less than 20,000, TDS provisions will not be applicable. Just I connect with the chapter TDS. Incentive to article assistant. Have this guy paid incentive to article assistant? Yes, sir. This incentive to article assistant represent amount paid to 2 article assistant for passing CA intermediate in the first attempt. Wow. That means that auditor is a very big kind-hearted person. Since their article have passed the CA intermediate in the first attempt, he paid some, sir, incentive. That is allowed under the head PGBP because that expenditure is not covered under 30 to 36. That expenditure is not personal in nature. That expenditure is not, sir, again illegal in nature. That expenditure has been incurred in the course or furtherance of business wholly and exclusively for the purpose of business. Hence, it can be debited to P&L account. Already debited to. It's not an impurity. Hence, no need to add it back. Repair and maintenance of the car include 2,000 for the period from 1/10/2024 to 39/2025. That means a part of the next year expense also has been debited to the current year P&L. What system of accounting they are following? Cash system of accounting. Cash system means whether the expense relating to next year or current year can be debited to P&L account. Are you all really with me? Hence, no adjustment is required. Salary include 30,000 to a computer specialist in cash for assisting Mr. P in one professional assignment in a single day to a single person. If the cash payment exceeding 10,000, entire amount should be added back as per 40A subsection 3. Are you all really with me? Traveling expense include, there was one traveling expense debited to P&L account. They are talking about that. Expenditure incurred on what travel? Foreign travel. Of rupees how much? 32,000. Which was within the RBI norms. So no need to add back anything because it is within the limit prescribed by what? RBI. If it is in excess of the limit prescribed by RBI, that extra should be added back. Medical insurance premium on the health of dependent brother and major son dependent on her, rupees 5,000 and 10,000 respectively, paid in cash. Sir, we are having 80D. D stands for doctor. Medical insurance premium paid by check. Have they paid by check? No, sir. They have paid in cash. They are not entitled to claim 80D. She invested an amount of 10,000 in NSC, National Savings Certificate. If you are invested in NSC, you are entitled to claim deduction under 80C. Are you all really with me? But in order to enjoy ITC, this guy should travel through the optional tax regime. She paid 70,000 towards advance tax during the previous year. You calculate the tax payable, reduce advance tax and TDS, you will be getting the net tax payable. Compute the total income and tax payable by Miss P for assessment year 25-26 in almost in the beneficial manner. That means I have to calculate under default tax regime and optional tax regime, and I have to say which route is beneficial to her. Are you feeling comfortable? You know one thing, this is our third question from the computation of total income. I said that till 7 question you should not do self-evaluation. By 7 question you will be start enjoying this subject like anything, and the first question we should attend in the examination is the computation of total income. Hello sir. Come on man, I am computing the total income and tax payable by P under default tax regime. The default tax regime, right sir? There is no income from salary. Can I compute income from house property? This is the income from house property, my dear lovable students, gross annual value. Actually, for a let out property, fair rent or municipal value, whichever is higher or standard rent, whichever is lower, that answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is higher. Right, sir? Sir, nothing has been given in the question, so I can take the actual rent received as the GAV. Less LT bar MT paid by the owner. This amount has been debited to P&L account. Should be NA back while calculating the PGBP, and can we claim it as a deduction while calculating IFHP? Are you all really with me? Then I will be getting the net annual value. On that net annual value, reduce 30% of net annual value. You will be getting the IFHP. The IFHP is 57,820. Easy. Coming to profits and gains of business or profession, I have to start with net profit. All the impurities debited to P&L account should be added back. All the other heads of income credited to P&L account should be reduced. I have to find out the PGBP. Can we? What is the net profit as per P&L account? 9,28,224. Add expenses debited but not allowable. Salary paid to computer specialist in cash, because as per section 40A subsection 3, in a single day to a single person, if the cash payment exceeding 10,000, entire amount debited to P&L account should be added back. Easy. Sir, amount paid for purchase of car, it is a capital expenditure. It is not a revenue expenditure. Capital expenditure will not be allowed as a deduction under 37 subsection 1. Hence, 80,000 should be added back. But we can claim depreciation for 80,000, my dear lovable students. 80,000 into 15% comes to 12,000. So 12,000 rupees can we claim it as a deduction as depreciation. Look, less depreciation on motor car 12,000. So when you are claiming this depreciation, you are having inner assumption. In the sense means, you are assuming that the car has been purchased by account pay check, account pay bank draft, electronic clearance system, such other electronic mode as may be prescribed. Right? Number 2, car has been put to use for more than 180 days. That's why you are entitled for full rate of depreciation. Right? Number 3, since the assessee is a chartered accountant, assessee is not entitled for additional depreciation. Because if an assessee invests in new plant and machinery, and assessee should be engaged in the production or manufacture of any article or thing or generation or distribution of power, he is entitled for additional depreciation. Here, additional depreciation concept will not be applicable. Sir, otherwise also will not be applicable. I am traveling through the default tax regime. This everything should strike as provision in your brain. Clear? Superman. Municipal taxes paid has been debited to P&L account should be added back. This is an impurity for the PGBP. My dear lovable students, you will be getting some amount as subtotal. Add value of benefit derived from client. Am I teacher? After you become chartered accountant, will you buy a BMW for me? It's a benefit for me. It's a perquisite to me. That perquisite will not be taxable under IFOS. That perquisite will be taxable under PGBP under section 28 clause 4. I already said section 28 is a charging section. Am I right? This amount has not been credited to the P&L account. This has been given in the adjustment. This should increase the PGBP income. That's why manually I am adding back. Are you all really with me? I will be getting subtotal from that. Then all the impurities credited to P&L account should be reduced. Dividend on shares should be reduced. Income from UTI should be reduced. Honorarium for valuation of answer sheet should be reduced. Rent received should be reduced. And these incomes should be taxed under IFOS. And this income should be taxed under IFHP. Pakka? And this is the income before depreciation. From that, we already claimed depreciation. So 9,20,200 is the income taxable under the head profits and gains of business or profession, right? There is no salary, there is no capital gain. So skip two heads. If you want, you can write income from salary dash, income from house property working note number 1, PGBP, then capital gain dash, then the answer will become big. Sir, coming to income from what? Other sources. Can I calculate IFOS? My dear lovable students, I am calculating IFOS. Dividend on shares of X Limited. Sir, this much amount has been received. Income from UTI, 7,600. Honorarium from valuation of answer paper, 15,800. Total, 33,924 is the income to be taxed under the head IFOS. If you add all the 5 heads of income, you will be getting gross total income. Accepting? Now you are traveling through the default tax regime. There is no question of chapter 6A and 10A. Are you all really with me? So the gross total income will be equal to total income. The total income round off to nearest 10 rupees. So 10,11,940 is the total income, right? What is his age? 55. Normal person. Up to 3 lakh rupees, it is nil. 3 lakh rupees to 7 lakh at the rate of 5%. 7 lakh to 10 lakh at the rate of 10%. In excess of 10 lakh at the rate of 15%. So you will be calculating on that. Is the total income exceed 50 lakh? No. That means he's not liable to pay surcharge at the rate of 10%. Then you will be getting the tax payable 51,791. Are you getting it? On that you have to add health and education cess of 4%. You will be getting total tax liability of 53,863. Have you paid already any advance tax? 70,000. This tax has been already paid, right? Have we got any dividend from Indian company? How much is the dividend he got taxed under the head IFOS? Taxed under the head IFOS. Dividend 10,524. Is this dividend more than 5,000? That means it is more than the threshold limit. Then the company is liable to deduct TDS under section 194 at the rate of 10%. At the rate of? So on that, they would have deducted TDS at the rate of 10%. Accepting? Next one, tax deducted at source from income from UTI. UTI means mutual fund. Once you get any dividend from mutual fund, they have to deduct TDS under 194K at the rate of 10%. Hello, sir? What is the amount of interest received from UTI? 7,000 into 10% come to 760. Both amount is more than 5,000. That's why the payer would have deducted TDS under 194 and 194K. Able to match with the TDS chapter? Sir, already I'm having refund, sir. If TDS also deducted means my refund will be more. So already 53,863 is the amount I am liable to pay. I already paid an advance tax of 70,000. Sir, and in addition to that, I have TDS has been deducted. So the total tax payable will be 17,950. That means if I am going through the default tax regime, I am entitled to get a refund of 17,950. Accepting. Now I am going to calculate the total income and tax payable under the normal provisions of the Act. Pakka. What is the gross total income? 10,11,940. This gross total income is as per the default tax regime. That means, sir, in this gross total income of 10,11,944, I am entitled to claim chapter 6A under the optional tax regime. Can I? I am going to calculate the chapter 6A eligibility, right, sir? Sir, chapter 6A eligibility, deduction under 80C. Have I invested in NSC? If you invest in NSC, you are entitled to claim 10,000. Sir, have you invested in, sir, 80D? Yes, sir. But it is by way of cash. Hence, you are not entitled to claim it as a deduction. So, the maximum deduction under chapter 6A, under the optional tax regime, come to 10,000. Accepting. So my total income comes to 10,01,944. It will be round off to 10,01,940. Can I calculate the tax payable under the optional tax regime? What's the age? 55. Up to 2.5 lakhs nil. 2.5 lakhs to 5 lakh. 5 lakh to 10 lakh. 10 lakhs above. Sir, at the rate of 30%. Accepting? 5%, 20%, 30%. Calculate the tax. You will be getting 1,13,082. Is the total income exceed 50 lakh? No. Assessee is not liable to pay surcharge at the rate of 10%. calculate health and education cess at the rate of 4%. So this will be the total tax liability. On that, have you already paid advance tax? Reduce it. Have already TDS deducted? Reduce it. You are entitled to get 45,790 rupees as refund or tax payable. Tax payable, because here the tax liability is higher. Yes, sir. If I am traveling through the default tax regime, government will call me and say that, sir, you are entitled to get 17,950. Hello. If I travel through the optional tax regime, sir, I have to pay 45,790. Hello. Since there is a tax refundable under the default tax regime, under 115 BAC, and tax payable under the regular provisions of Income Tax Act, it would be beneficial for Mr. P to pay tax under the default tax regime under 115 BAC. Are you able to appreciate? Sir, these notes you should read, you should write when you practice the question itself. Otherwise, in exam, it won't come. It has been assumed that motor car was put to use for more than 180 days during the previous year, and full depreciation at 15% has been provided under section 32 subsection 1 class 2. Alternatively, question can be solved by assuming motor car has been put to use for less than, and accordingly 50% of the depreciation would be allowable as per the second proviso. Am I right, sir? Incentive to article assistant for passing CA intermediate in their first examination is deductible under 37 subsection 1. If you are not writing these notes, examiner will take it as you have skipped the information. You don't know you skipped. No, you know. But you have to show to the examiner that you know. Please write the notes. Repair and maintenance paid in advance for the period 1/4/25 to 39. That relates to next year. Am I right? For 6 months amounting to 1,000 is allowable since Mr. P is following the what system of accounting. Rupees 32,000 expended on foreign tour is allowable as deduction, assuming that it was incurred in connection with her what work? Professional work. Since it has already been debited to income and expenditure account, no further adjustment is required. Are you start feeling comfortable? Premium paid to ensure the health of brother is not eligible for deduction because brother is not at all in the definition of the family under 80D. Under section 80D, even though he is a dependent, since brother is not included in the definition of family. But premium paid to ensure the health of major son is not eligible for deduction, even though he is dependent, since a payment is made in cash. Two things you should understand. First payment made to the brother. Brother is not at all in the definition of the family. Second one is major son dependent, actually eligible. But I paid in cash. What is 80D? Medical insurance premium paid by check. Are you comfortable? You look, we have done third question only. But with regard to third question itself, at least you would have reached 50% of comfortness in the computation of the total income. You know, we are planning for 30 questions. Look at the confidence you will be having once we solve 30 questions. I will solve all the 30 questions. Many people, if it is face-to-face, if it is virtuals, if it is YouTube, they will hear the sum. Only certain students will do the sum. Those who are doing the sum will reach the comfort by 7th question itself. Those who are vouching or auditing the sum may not reach till if I reach 20 question. So you want that comfort very quick? Don't do the audit. Take your pen, pencil, rubber, cutter, everything. Solve this question. Check how much time you are taking to solve the question. Because this is a 15-mark question which is going to be asked in exam. 15 into 1.8 comes to 27 minutes is the allotted time. So you can take maximum 30 minutes of time. That too with powder, lipstick, everything. You have to write the notes. You have to properly present it. Proper working note. Sir, those who have the writing practice for the 30 question, no one can touch you. I hope that you will be completing the writing practice and come back. In the coming slot, we will be doing another question I hope that you are feeling so much comfortable with the computation of total income. I am with you, sir, from your heart. Anybody is there? Where is a grand clap? Sir, very happy morning to all, happy afternoon to all, and happy evening to all. We are doing computation of total income, my dear lovable students. As we all know that this is the 15-mark area for exam. And in that category, we have solved already 3 questions. And this is our 4 by 30 is the target. Right, sir? And this is a beautiful, fantastic, outstanding, brilliant question with a lot of adjustment. And this is a May 2023 question. May 2023 question. So, this is the expectation from the examiner. This much big question will be given with this much adjustment. So, my dear lovable students, what is your duty for the next 30-45 minutes? You know, be with me, enjoy 100%. Then, once we start looking into this much big question, automatically we will fall into doing big question. Mr. B, I will be using B, a resident individual. Sir, in many sections, we will be using the reference of resident. Aged 52 years, age is 52, provides management consultancy service to various corporate and non-corporate clients. That means like a chartered accountant. His income and expenditure account for the year ended 31st March 2025 is given as under. Because he's not a businessman, that's why P&L account is not given. That's why income and expenditure account is given. There is no difference between P&L and income and expenditure account for the purpose of tax. Because all the income will be credited and all the expenses will be debited. Instead of net profit, we will call it as excess of income over expenditure. Let it be there. That's not my issue. By gross receipts from profession, 60,60,000 current year receipt. Last year, 75 lakh. No TDS was deducted from any of the receipt. That means the clients who have paid fees to me have not deducted TDS. That's not my concern. Are you all really with me? That's client's concern. If client is to face the consequences. Interest on savings bank account, impurity under the PGBP, this has to be taxed under IFOS. So it has to be removed from PGBP and you can claim deduction under 80 TTA to the extent of 10,000. If the assessee is traveling through the optional tax regime. This many things should come to your brain. By winning from lottery, my dear lovable students, winning from lottery is IFOS, income from other sources. Income from other sources. So this is an impurity, should be reduced from the PGB. Net of cost of lottery ticket 500. Lottery ticket cannot be claimed as a deduction. Because against casual income, no deduction will be allowed as per section 57. Hello, sir. Rent received 2,40,000. My dear lovable students, this is IFHP. Remove from the PGBP, include in the IFHP. Employees remuneration allowed as business expenditure. Nothing has been specifically given. Office and administrative expense allowed. Rent and rates allowed. Interest expense allowed. Office rent allowed. Insurance premium allowed. Professional fees allowed. Depreciation on computer allowed properly if it has been calculated. This is the, sir, excess of income over expenditure. So take the net profit basically. Remove all the impurities. Reach the PGBP. Are you comfortable? Following details relating to financial year 24-25. Nearly, sir, 9 details has been given in the question. Employees remuneration include a sum of 3 lakh. That means inside this 15 lakh, there is 3 lakh. Okay. Paid to his wife. Wife means a related person. Mrs. Meena, who's working as a manager in his office. That means, sir, wife is a related party. Sir, 40A subsection 2 may be applicable. What 40A subsection 2 is saying that if you are making any payment to a related person, which is over and above the excessive market price, that extra should be added back. That extra should be, she does not have any technical or professional qualification or experience required for the job. The payment for salary was R as per market rates. Wow. In comparison to similar work profile. A person who does not having experience, if they are coming and working in my office, I usually give them 3 lakh rupees in a year. The same 3 lakh only I have paid to my wife also. So even though I made a related party transaction, since I have not paid anything extra over and above the market price, nothing will be added back as per section 40A subsection 2. Some students will add back this 3 lakh. Some students will not add back by saying that nothing has been paid in extra of the what price? Market price. But the problem I will tell you, clubbing provisions will be applicable. what clubbing provisions is saying that Mr. A is the owner of this entity. That means he's having substantial interest. From a concern in which if one guy is having a substantial interest and other spouse is getting any remuneration and other spouse does not possess technical or professional qualification, then it will be treated as the salary of the person who are having substantial interest, right? You don't add back anything in PGBP, but it will be treated as salary income of Mr. B. And when you are claiming salary income, don't forget to reduce the standard deduction. Super. Second point, 1.2 heads they have tested. Mr. B owns a big house with 2 independent units. Unit 1 with 50% floor area has been let out for residential purpose at a monthly rent of 20,000 for the entire year. Let me ask you a question. 20,000 into 12. 2,40,000. What is the rent received? 2,40,000. Exactly matched with the P&L account. Remove it from the PGBP. Show it under the IFHP. Less LT bar MT paid by the owner. Knock it off the workings. Are you really with me? Unit 2 with a balance 50% of the floor area is used by Mr. B as his residence cum office. That means the remaining 50 should be classified to 25% and 25%. Because total 100% classified in 2 category 50-50. In that second 50, 50% they are classifying. That means 50% comes to 25%. Accepting. 25% for his own residence and 25% for the office. Other particulars of the house are municipal valuation they have given, fair rent they have given, standard rent they have given. We have to apply the IFHP provision. Fair rent or municipal value, whichever is higher. Whichever is higher or standard rent, whichever is lower, the answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is higher. We will be applying that. Rent and rates include. Go and see rent and rates. How much is rent and rates? 15,000 is what? Rates and tax. Is there any rent and rates? Any other head? No, sir. That's they are talking only that. A sum of 10,000 pays municipal tax of the house. It is an impurity for the head PGBP. Should be added back and should be reduced when you are calculating LT bar MT paid by the owner. This 10,000 is for the house. In that house, 3 parts are there. Let out portion, self-occupied portion, business portion. Are you really with me? Interest expense represent interest on capital borrowed from a nationalized bank for the construction of the house. Oh my God. They have debited interest expense of 80,000. This is IOBC. Has been debited to P&L account. This is an impurity for PGBP. Should be NA back. The construction was completed in financial year 10-11. Neither the loan nor the interest was paid till the due date of filing return of income. No problem. As per section 24B, interest can be claimed as a deduction on accrual basis. Only LT bar MT paid by the owner. Local tax or municipal tax is cash basis. Since the principal has not been paid during the year under ATC, you can't claim it as a deduction. Because, sir, LT bar MT cash basis. Sir, interest on borrowed capital, accrual basis, ATC, cash basis. Are you all really with me? Look how many provisions they are checking. We should be that much conceptually strong. Based on the actual rent received for Unit 1, Mr. B has 2,40,000 debited as notional rent for Unit 2, which is used for his profession. That means he is feeling that, Mr. B is feeling that, okay, one portion I have let out. For that, I am receiving 2,40,000 rupees. The other portion which I have been used for the business or profession. That means instead of me using my own building for business or profession, if I have taken the building for rent, I am liable to pay, my dear lovable students, 2,40,000 as rent. So that notional rent I am debiting to what account? P&L account. Read it based on the actual rent received of Unit 1. So by considering the actual rent received, Mr. B has 2,40,000 debited as what rent? Notional rent. For Unit 2, which is used for his profession, is there any rent debited? Office rent 2,40,000. Oh my God. Is this actual rent? Notional rent. We are having section 28 charging section, 29 computational section, section 30 expenditure relating to building. What section 30 expenditure relating to building saying that actual rent paid will be allowed as a deduction. Notional rent should be added back. That cannot be debited to P&L account. Are you really with me? The expense on insurance premium of 72,000. We are having insurance premium 72,000. Represent lump sum health insurance premium paid by B for 3 years effective from 1st July to 30th June 2027 for himself, spouse and 2 dependent children. The said insurance premium was paid through account pay check. First of all, can insurance premium paid is a allowed expenditure for PGBP? It's an impurity, should be added back. And once you are traveling through the optional tax regime, you are entitled to claim deduction under 80D. Hello, sir. That too, sir, 72,000 you have paid for how many years? 3 years. 72,000 divided by 3 comes to 24,000, which is less than 25,000. Are you really with me? That we will be taken care in chapter 6A deduction. Are you able to link, sir? The expense on professional fee paid include a sum of 1 lakh paid to Mr. R, an Indian resident on which no TDS was deducted. If you make any payment for professional fee, you are liable to deduct TDS under 194J. Since the payment has been made to a resident on which TDS has not been deducted, you are liable to, sir, disallow 30%. So 1 lakh into 30% comes to, should be added back. There was only one block containing computer which came into existence only on 2nd April with new laptop 1,60,000. Printers and scanners for 40,000 were purchased. He charged depreciation at 60% for the entire cost of 2 lakh. Oh my God. The maximum rate of depreciation for computer is 40%. That too, new laptop comes on 2nd April. Are you really with me? Yes, sir. Because all are more than 180 days. Right, sir? Of rupees 2 lakh and debited to the income and expenditure account. That means whatever depreciation debited to the income and expenditure account should be added back because that is wrong. And we have to calculate the current depreciation and we have to reduce. Coming to the next one. Mr. B has also taken a loan of 5 lakh from a nationalized bank for higher education of his son. For financial year 24-25, he repaid principal of 75,000 along with interest of 40,000. 80E interest on higher education they are checking. The amount is not reflected in the income and expenditure account. That means no impurities there in the income and expenditure account, but you have to separately claim deduction under chapter 6A. You are required to compute the total income under the proper heads of income of Mr. B for assessment year 25-26 under the regular provisions of the Income Tax Act. Regular provision means optional tax regime. Assuming that he has not opted to pay tax under 115 BAC, he said that I don't want default tax regime. Also calculate the total tax payable by him. This is an expected question. Like this range only you will be getting a question. Are you feeling very comfortable? My dear lovable students, I am starting one by one. Can I start salary? Actually, if you look, there is no salary income at all for this guy. But from a concern, his spouse is also getting salary. Hello, sir. And spouse is not eligible to receive. My dear lovable students, clubbing provisions will be computation of income from salary. Salary of Mrs. Meena, remuneration paid by Mr. B to his wife, Mrs. Meena, who is employed as manager in his office, would be included in his hands since Mrs. Meena does not have any technical or professional qualification or experience required for the job. How much lakh? 3 lakh. But less standard deduction under 16(1)(a) 50,000. Why 50? Optional tax regime. If the route is default tax regime, then 75,000. So income from salary is 2,50,000. Is point number 1 clear? Moving to income from house property, man. Easy, man. Income from house property. Sir, let out property portion number 1 in unit number 1, 50% area I am calculating. Right, sir? GAV. Sir, GAV is fair rent or municipal value, whichever is higher. Correct? So come on, man. Actually, I have to classify the property into 3 categories. Right? So basically putting 4 columns, which is nothing but first column, total column, then let out property, then self-occupied property, then business portion. Am I right? Fair rent, municipal value, sir, standard rent, actual rent received or receivable. Easy. Please help me look at the question and tell me what is the total fair rent of the house as a whole. 4,20,000. What is the municipal value for the house as a whole? 3,60,000. Standard rent for the house as a whole, 4 lakhs. Actual rent received or receivable for the let out portion, 2,40,000. This 2,40,000, 100% will go to the let out portion. Am I right? My dear lovable students, this 4,20,000, 50% is let out portion, 25% is self-occupied, and 25% is business portion. Am I right? So 4,20,000 into 50% comes to 2,10,000. 4,20,000 into 25% comes to 1,05,000 and 1,05,000. Accepting? 3,60,000 into 50% comes to 1,80,000. 1,05,000 into 25% comes to 90. 3,60,000 into 25%, 90,000. And again 90,000. 4 lakh into 50, 2 lakhs. 4 lakh into 25, 1 lakh. And again 1 lakh. Now I am going to calculate the gross annual value for the let out portion. Come on, fair rent or municipal value, whichever is higher. 2,10,000. Or standard rent, whichever is lower. 2 lakh. Or actual rent received or receivable, whichever is higher. 2,40,000. So my dear lovable students, 2,40,000 is the GAV. Less LT bar MT paid by the owner. Sir, the same, sir, I am putting the master table, my dear lovable students. Is there any LT bar MT paid by the owner? Municipal tax for the entire house, 10,000. Split it as 5,000, 2,500, 2,500. Clarity? That's why 5,000 has been claimed as deduction. You will be getting NAV. From that, reduce 30%, 70,500. Reduce IOBC. My dear lovable students, sir, I have to split the IOBC for the entire house is 80,000. That means 40,000 for the let out portion, 20,000 for the self-occupied portion, 20,000 for the business portion. Easy. That means 40,000. I will be getting IFHP as 1,24,500. 1 lakh self-occupied. No man. 2,40,000 minus 5,000 comes to 2,35,000. Minus, sir, into 30% come to 70,500. Are you all really with me? Sir, up 2,35,000 minus 70,500 minus 40,000 comes to 1,24,500. Here 1,24,500. But is there any self-occupied property? Final answer should be written here. I have just to finalize the what property, man? Let out property. Now I am computation of IFHP from self-occupied property. What route you are traveling? If you are traveling optional tax regime, IOBC under 24B is allowed. Not restricted. So I have to calculate, man. Since unit 2 representing 50% of what area? Floor area is used for residence as well as business purpose. It is assumed that it is equally used for what and what. So out of 50%, 25% is residence. That is 50% of the 50%, I am saying. Hello, sir. Out of the total, sir, 50%, 25% is residence and 25% is business. GAV nil. Because for the self-occupied property, we don't have GAV. Less LT bar MT not applicable. Even though you have paid, cannot be claimed as a reduction. Because since you are not declaring income, LT bar MT cannot be claimed. NAV nil. Less deduction, we have already done that. 20,000 is for the self-occupied property. Am I right? That can be claimed as deduction 20,000. Sir, if an assessee has taken a loan on or after 1/4/1999 and loan amount should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been taken. If that is the case, he can claim maximum 2 lakh rupees as deduction, right? Here the interest itself is only 20,000. So already you are having 1,24,500 minus loss of 20,000. So 1,04,500 will be the net income from house property. Are you settled? That's it. I'm coming to PGBP, the hero, the real hero, going to compute PGBP. What is the net profit? 36,97,500 in the net profit. Any expenses, sir, expense debited to income and expenditure, but not allowable as deduction. Sir, actually, they have paid remuneration to wife. Anything over and above market price? No, sir. That means, my dear lovable students, sir, nothing should be in a back. But this should be treated as salary income as per the clubbing provisions, which we already done. Able to connect municipal taxes attributable to let out and self-occupied. You tell me, out of 100% of the house property, 50% is let out. That is IFHP. Sir, balance 50%, 50% to 50%, 25% is self-occupied. That means remaining 25% is business. That 25% is allowed. 75% should be disallowed. So the impurity is 75%. Logic clear? 10,000 into 75%, 7,500 should be in a back. My dear lovable students, interest on capital borrowed for construction of house attributable to let out and self-occupied portion. How much is the total interest debited? 80,000. Out of that, self-occupied portion, 25%. Let out portion, 50%. Total 75% is the impurity. So 80,000 into 75%, 60,000. Comfortable? Interest on capital borrowed from a bank for construction of the house to business portion, 25% of 80,000 not allowable since it is not paid on or before due date for filing return of income by virtue of 43B. Sir, you should be very, very clear and clever. What is the total interest on capital borrowed? 80,000. Look at the understanding. Look at the understanding. Enjoy. Out of this 80,000, actually 75% is an impurity. That means 50% is related to let out property and 25% is related to self-occupied property. That means the 75,000 which come to 60,000 should be added back. That I have done. What is the fate of remaining 20,000? Actually, this 20,000 is for the purpose of business or profession. But it has not been paid before filing the return of income. Then section 43B will be applicable. Section 43B is saying that any tax, duty, cess or fees payable, any interest payable to scheduled bank, any interest payable to financial institution or NBFC, or any leave salary payable to employee, or employer's contribution to any fund for the welfare of the employees, any amount payable to railway authorities. Hello, sir. Any leave salary to employees, if these amount are payable on 31st of March, and if these amount are still payable on the date of filing the return of income, that should be added back. That's why even that 20,000 also should be added back. Every student will be so, sir, interested to add back this 60,000 and then leave the remaining 20,000. Since that is interest on borrowed capital, as per section 36, subsection 1, class 3, in order to claim it as a deduction, you should satisfy the condition which are prescribed under 43B. Hello, sir. Hence, that 20,000 should also be added back. Notional rent for unit 2 used for business or profession. Sir, it is not allowable as deduction under section 30. Since B himself is the owner of the property, I myself can't pay rent to me. Correct? Hence, that amount debited to P&L account should be added back. Hence, this 2,40,000 has been added back. Insurance premium, personal expenditure is not allowed. Hence, it has to be what back? Added back. Professional fee to Mr. R without 30,000 deducting TDS. So, 1 lakh into 30%, 30,000 should be back. Mr. B is required to deduct TDS on professional fee payment to R since his gross receipt from profession exceed how much? Lakh 50 lakh. Sir, is this guy an individual or HF? Yes, sir. Since the assessee is an individual or HF, in the immediately preceding previous year, if the turnover does not exceed 1 crore in case of business or 50 lakhs in case of profession, in the current previous year for hijacker, no TDS is liable to be deducted. But question specifically said that this guy's turnover has exceeds 50 lakh. That means in the last year it is 60 lakh. That means hijacker benefit will not be available. So he is liable to deduct TDS under 194J. Since he has not deducted TDS, 30% of the sum paid to R without deducting tax at source should be added back. 1 lakh into 30%. Are you able to place the provision? Are you able to connect the TDS? Depreciation as per books should be added back because 60% has been provided. Only maximum rate is only, I will be getting subtotal, man, less. Income credited to income and expenditure account, but not taxable as business income. Interest on savings bank account. This income should be taxed under, first reduced from PGBP, including IFOS. Winning from lottery, my dear lovable students, should be taxable under, reduced from PGBP, taxable under, rent received, should be taxable under IFHP. We have already done that. Now I am just removing the effect, man. Less depreciation, sir, actually 2 lakh rupees, right? Which is 1,60,000 plus 40,000. You should understand one thing. Both has been put to use more than 180 days. Both has been acquired by way of account pay check. Hence, the both assets are entitled for depreciation at the rate of how much percent? 40%. That means, my dear lovable students, 2 lakh into 40% comes to 80,000. Look, man, 64,000 and 16,000 was put to use for more than 180 days in the previous year. Printers and scanners are also eligible for higher depreciation. So 2 lakh into 40% comes to 80,000 will be the amount of depreciation. But how much they provide in books? Lose sumari 1,20,000 because they provided 60%. But the maximum depreciation allowable for computer and computer peripherals are only 40%. You will be getting PGBP of 38,02,500. I believe that you are able to place the PGBP 38,02,500. Do you have any capital gain? Can we finalize IFOS? Sir, if you finalize IFOS, man, whatever amount has been removed from the PGBP has to be put in IFOS. Savings bank account, 25,000. Winning from lottery, 1 lakh. There you should count one thing. No expenditure or allowances allowed from lottery income. So the taxable IFOS will be 1,25,000. Done. All the 5 hits done. Salary done. House property done. PGP done. Capital gain done. IFOS done. You will be getting gross total income of 42,82,000. Are you able to live with me? Less chapter 6A deduction. Can I fill the chapter 6A? Sir, my dear lovable students, 80D. 80D. Are you all with me? Medical insurance premium. Is it bulk? Yes, sir. Sir, being the previous year in which insurance would be in force, allowable for self, spouse, and dependent children. Here, students will commit a mistake. Come on, man. I will highlight that point. Point number 6. The expenditure on insurance premium of 72,000 represent lump sum health insurance premium paid by Basin for 3 years, effective from 1st July. That means our year is 24-25. Yes, sir. To 30th June 2027. That means, sir, financial year 24-25, 25-26, 26-27, June 27. That means 27-28. How many year? 4 year. That means I paid premium for 4 years. I paid premium for 4 years. For himself, spouse, 2 dependent children. That is allowed as per 80D. The said insurance premium was paid through account paycheck. Then only I am entitled to claim it as deduction under 80D. Many cases we saw. If it is paid by cash, it is not allowed as a deduction. That means this amount has been paid for how many years? So 72,000 divided by 4. 18,000 being the previous year in which insurance would be in force, allowable for self, spouse, and dependent children. 99% of the students will take it as 3 years because question said that 3 years. Even though he paid for 3 years, it is actually everlasting for how many years? 4 years. It should be spread for 4 financial years. Deduction under 80E, interest on higher education. Interest on higher education. What, man? How much interest component? 40,000. 80 TTA. 10,000. So 68,000 is the chapter 6A deduction, man. Sir, in that you will be getting taxable income of 42,14,000. Can we calculate the tax payable? How many route? Only one route. Which route? Optional tax regime. Optional tax regime, you know, slab up to 2.5 lakhs nil. 2.5 lakhs to 5 lakh. 5 lakh to 10 lakh. More than 10 lakh. 5%, 20%, 30%. You will be getting 10 lakh 46,700. Is the total income of the assessee exceeds 50 lakhs. No, sir. That means there is no implication of surcharge. So 10 lakh 76,400 into 4% comes to this much. You will be getting total tax liability, right? Any TDS has been deducted? Yes. We are having winning from lottery. Winning from lottery. Question specifically said that on professional income, no TDS has been deducted. But on lottery, 194B, 194BA, 194BB, sir, TDS will be deducted at the rate of 30%. TDS will be deducted at the rate of, how much is the lottery income which you have included under IFOS? 1 lakh. 1 lakh into 30,000, 30%. 30,000 would have deducted as TDS. So this is the tax payable. A round off to nearest 10 lakh 89,770. That's it. The beautiful question of the 4th question. Are you feeling better? Yes, sir. Again, I will tell you, this is the 4th question out of 30th question. If you are listening, if you are auditing, if you listen till 30th question, no, 300 question, you will never get the control. If you want, you have to take pen, pencil, rubber, cutter, and you have to do by yourself. And, sir, highlight or, sir, update what are the important adjustments we have learned in this question. Because last question you learned something. This question you would have learned something that you have to mark. Then only before the day of examination, important things in that question you can go. Sir, do you think that in 1.5 days can you do all the question? Never possible, sir. Impossible, sir. My dear lovable students, you understand. Okay, this point I missed. Oh, this is a beautiful point in this question. Like that. Then before the day of examination, you can quickly go through that. Are you all really with me? Sir, complete this. We'll be moving into the 5 by 30 in the next lecture, man. I'm with you from your heart. Anybody is there? Where is a grand clap? Sir, very happy morning to all. So we are doing computation of total income. We are moving into the next question from the computation of total income. Mr. Valen, a resident and ordinarily resident. Sir, when you read this word in tax, global income is taxable in India. Global income is taxable in India. Aged 58 years, that means a normal person, is engaged in the business of manufacturing of steel. Let it be there. He is subject to tax audit under 44AB of the Income Tax Act. He has provided the following information. P&L account for the year ended 31st March. GP has been given. That means they have skipped the trading account. Directly they have given the P&L account. GP 88 lakh 45,000. Let it be there. Profit on sale of asset of scientific research. Sir, this is a capital asset, my dear lovable students. The income should be taxable under the head capital gain. But this has been credited to P&L account, removed from the P&L account and tax it under capital gain. Winning from lottery, it is a casual income. It's an IFOS income, 47,250. Specifically, they are saying that net of TDS at the rate of 30%. Because under 194B, TDS will be deducted at the rate of 30%. So you have to gross up, show 100% income under the head IFOS, reduce TDS at the rate of 30%. To administrative expenses, salaries and wages, interest on loan, depreciation, professional fee, rent rates and taxes, traveling and conveyance, and net profit 23,61,750. My dear lovable students, when you see the P&L, profit on sale on asset of scientific research is an impurity. Sir, prima facie, we have to remove that. Winning from lottery is an impurity. Prima facie, we have to remove that. But all the items debited to P&L account looks correct. I have to read the notes. Right, sir? Explanatory information. Opening and closing stock of finished goods were undervalued by 10%. That means there is a mistake or error in the trading account. Opening stock is undervalued. My dear lovable students, if opening stock value reduces, automatically profit increases. Are you with me? If closing stock reduces, profit reduces. Pakka? Of how much, man? Opening stock of 3,30,000 and closing stock of 4,38,000 was shown. That means they are having opening stock of 3,30,000 and closing stock of 4,38,000. So 3,30,000 minus 4,38,000 comes to 1 lakh. 3,30,000 minus 4,38,000 comes to is the net difference in the stock. Either you can treat opening stock separately, closing stock separately, or you can treat the net amount 10% we will take care. Number 2, very important point. Salaries and wages include the following item. This is what the salaries and wages. When we look at the prima facie first time, we thought that it is correct, but they are having certain adjustment. Contributed 20% of basic salary in NPS, referred in 80CCD for an employee. We all know that an employer can maximum contribute 14%, but he contributed 20%. Mr. Ganesh was withdrawn basic salary of 4 lakh and DA 40% of basic salary. In that 40%, 50% of the DA form part of the retirement benefits. Right, sir? So 4 lakhs plus 40% comes to 1,60,000. So 1,60,000 into 50% comes to 80,000. So the definition of salary is 4,80,000. Am I right? My dear lovable students, on this 4,80,000, how much is allowed? 14% is allowed. So 67,200 they can contribute, right? But look, contributed 20% of basic salary. Up. They have not contributed DA. They contributed only 20% of the what salary? That means, sir, 4 lakhs into 20% means 80,000 they have contributed. Are you with me? So 80,000 minus 67,200 comes to 12,800. They have extra contributed. This should be added back as per 40A subsection 9. Contribution to unrecognized fund. How much you should add back? 12,800. That's what the calculation. 12,800. Can I? Some of the employees opted for retirement under VRS scheme. A sum of 3,50,000 was paid to them on 1st January 2025. My dear lovable students, sir, under section 35DD, that is what is 35DDA, VRS, only 1/5 of the expense can be debited to P&L account. That means extra 4/5 should be added back. So 3,50,000 into 4 by 5 comes to 2,80,000 should be added back. That means, sir, that extra 2,80,000 we have to add back. Are you really with me? interest on loan include interest paid at 15% per annum on loan of 18 lakh. That means you have taken a loan for rupees 18 lakh, which was taken from SBI on 1/7/2024 for purchase of new electric car of 20 lakh. You have bought a car, electric car. Sir, that car has been, sir, bought by taking loan. The car is used for personal purpose. That means that interest will not be allowed as a, that interest should be, that means 18 lakhs into 15% into 1/7 you took the loan. So 7, 8, 9, 10, 11, 12, 1, 2, 3. How much one? 9 months into 9/12. So 18 lakh into 15% in 9/12. 2,02,500 should be added back. Accepting. Depreciation allowable as per the income tax rule is 5,50,000, but the real depreciation debited to P&L is 9,25,000. So should be added back 9,25,500. Accepting. And my dear lovable students, after you add back that depreciation, whatever depreciation allowable as per the income tax rule should be reduced. Right? Sir, this is what depreciation as per income tax rules is 5,50,000. Accepting. Sir, but during the calculation of such depreciation, following addition was not considered. That means even this 5,50,000 is not complete. So, whatever depreciation debited to P&L account should be added back. I have to reduce 5,50,000. In addition to that, motor car purchase for 3,50,000. For supply of finished goods to dealers on 25/9. From 25/9 till 31st of March, more than 180 days, less than 180 days. More than 180 days. That means 3,50,000 into 15% comes to 52,000 is the depreciation you are entitled to get for the motor car. That's what 52,500. So total 6,02,500 is the correct depreciation as per Income Tax Act. Right, sir? Next one, man. An asset was purchased for how much lakh? 7 lakh. On 17/11/2023. 23 in the sense means 22/23. Am I right? For conducting scientific research, and deduction was claimed under section 35 of the Income Tax Act. In that year, we already claimed deduction under section 35. This asset was sold on 5/10/2024 for a consideration of how much lakh? 9 lakh. This year, we sold this asset for 9 lakh. That means this is a capital asset. Are you agree with me? But the entire gain will not be taxed under the head capital gain. Since you have already claimed a deduction under the head PGBP, to the extent of the deduction claimed under the head PGBP will be reversed under the head PGBP under section 41 subsection 3, sale of asset used for scientific research. Right? Over and above the cost of the asset should only be taxable under the head capital gain by comparing whether the capital gain is a short-term capital gain or long-term capital gain. Accepting. Sir, other information. A plot of individual land which was used by Mr. Whelan for business purpose for last 10 years was compulsory acquired by central government on 7/4/2024. 45 subsection 5. Compulsory acquisition of land and building. Are you all really with me? Compensation of 15,95,262 was received on 27/2024. Original compensation will be taxable under the head capital gain. Such property was purchased by him on 8/10/2006 for 2,50,000. Hello, sir. That means, sir, this is a long-term capital asset. Since the period of holding is more than 24 months. He has purchased another plot of industrial land on 15/4/2025 for how much lakh? 7 lakh. So in addition to that, my dear lovable students, he has purchased another plot of industrial land. Another plot of? That means, sir, after compulsory acquisition, they have purchased one more land. We are having capital gain exemption, 54, 54B, 54D. What is 54D? Purchase of land and building for industrial undertaking. Government has also paid 1,05,000 as interest on such compensation. That interest on such compensation will be taxable under the head IFOS. After claiming a flat deduction of 50%. CII has been given. If it is required, we have to use. Yes, we have to. It is required because, my dear lovable students, compulsory acquired on 7/4/2024, which is before the amendment date. Hence, the capital gain is a long-term capital gain. It is subject to cost of indexation. Compute the total income, tax liability of Whelan for assessment year 25-26, assuming that he has not opted for the provision of 115 BAC. This is a past examination question. Can we knock off? Commandment computation of total income of Mr. Whelan. Income from salary, nothing, because no salary information has been given in the Income from house property, nothing. No, sir, IFHP information has been given in the question. Sir, PGBP, my dear lovable students, we have to start with net profit as per P&L account. 23,61,750 is the net profit. Already given in the... Sir, add items debited but not allowable. Number 1, employer's contribution. 12,800 extra should be back, added back. If you want clarification, once again, the basic salary is equal to how much lakh? 4 lakh. Add DA, how much percent? 40%. So 4 lakh into 40%, 1,60,000. Out of that 1,60,000, only 50% is for the retirement benefits. Comes to, so the salary for the purpose of contribution is 4,80,000, right, sir? So on this, actually the employer is entitled to contribute 14%. So 4,80,000 into 14% comes to 67,000. My dear lovable students, but really the employer contributed 20% of basic salary. So 4,80,000 into 20% comes to 4 lakh. Basic is 4 lakh. Basic 4 lakh into 20% comes to 80,000. 4 lakh into 20% comes to 80,000. Are you really with me? So in place of 67,200, they have contributed 80,000, means 12,800 extra. That 12,800 has been added back. Paka? VRS, next adjustment. What is the total VRS debited to P&L? 3,50,000. Sir, on this only 20% will be allowed as a deduction, right? That means 4/5 should be added back. So 3,50,000 into 4 by 5 comes to 2,80,000 should be added back, right, sir? Interest on loan. Have you taken the loan for business purpose? No. How much is the loan amount? 18 lakhs is the loan amount into 15% into 9 by 12. So extra interest of 2,02,500 debited to P&L account should be. That's it, my dear lovable students. Have you sold an asset? Have you sold an asset which has been used for the scientific research? Then the net selling price or deduction claimed under section 35, whichever is lower, should be taxable under PGBP, right, sir? Tell my dear lovable students, how much is the net selling price? You sold for 9 lakhs. So net selling price is equal to 9 lakh. What is the deduction you claimed under section 35? 7 lakhs. Whichever is lower comes to, the 7 lakh should be taxable under the head PGBP as per section 41 subsection 3. Am I right? My dear lovable students, this amount is not credited to P&L account. Only profit of 2 lakh rupees is credited to what account? P&L account. So I am manually crediting that to P&L account. If I manually credit that to P&L account, my net profit as per P&L account will be increased. Are you really with me? That's why I am adding how much lakh? 7 lakh. But unnecessarily, how much lakhs is debited? Sorry, how much lakhs is credited in the P&L? 2 lakhs. That I have to remove, man, because that 2 lakh should be taxable under the head capital gain. That means I am eliminating that 2 lakh and applying 41 subsection 3. Settled with the provision. Now, undervaluation of stock. Sir, I am taking the net stock, man, in the sense means, my dear lovable students, what is opening? Opening stock? 3,30,000. Closing stock? 4,38,000. What is the delta difference? 1,08,000. Which stock is less? Closing stock is less or opening stock is less? Opening stock is less. That means closing stock difference is 1,08,000, right? So 1,08,000 is the difference. Undervaluation of stock. Undervaluation of? So my dear lovable students, sir, I am taking 4,38,000 rupees as a closing stock value and 3,30,000 rupees as the opening stock value. Accepting, sir. That means there is a difference of 1,08,000. That 1,08,000 is not 100%. That 1,08,000 is only. So 1,08,000 divided by 90 into 10. Into 10 comes to how much? 12,000. So that 12,000 should be added because of undervaluation, closing stock value would have been lesser. Because of closing stock value lesser, net profit would have been reduced. Accepting? So that 12,000 should be added. Accepting? Sir, you can take alternatively opening stock separately and closing stock separately. For example, if you are taking undervaluation of closing stock. For example, what is the closing stock value? 4 lakh. Calculator. 4,38,000 divided by 90 into 10. How much you are getting? 48,667. Are you all ready with me? What is the opening stock value? 3,30,000 divided by 90 into 10 comes to 36,667. Accepting. So 48,667 minus 36,667 comes to, that's why instead of treating opening stock separately, closing stock separately, I have netted off and I understood that closing stock is more undervalued. Hello, sir. If closing stock is undervalued, net profit reduces. So add back that 10%. Easy. So my dear lovable students, take your calculator, man. What is a net profit as per P&L account? 23,61,750. Are you all really with me? So to that, I have to add 12,800. Why? Excess contribution to employer. As per 40A subsection 9. The applicable section is 40A subsection 9. Accepting. VRS 2,80,000. I should add back. Why? Because as per section 35 DDA VRS. Accepting. I have to add 2,02,500. Why? Because section 37 personal expenditure will not be allowed as a deduction. Next one, sir. Sir, as per section 35, hello sir, already deduction claimed. Now deemed income under 41 subsection 3 should be applicable. So that's why I'm crediting to P&L. Because of crediting, my net profit should increase. That's why I'm adding 7 lakh. Are you really with me? And because of undervaluation of what stock? Closing stock. My dear lovable students, I should add back what, man? 12,000. Then I have to debit the depreciation also. What is the depreciation debited to P&L? Depreciation debited to P&L 9,25,500. Hello, sir. That 9,25,500 should also be added back. So you will be getting how much? 44,94,550 is the subtotal. From that, real depreciation I have to reduce. Have you understood that? Then items credited to P&L account and should be taxed under other heads of income should be reduced. Hello, sir. Winning from lottery should be reduced. You will be getting net profit of 36,44,800. Accepting. Yes, coming to capital gain, my dear lovable students, I am going to calculate the capital gain. Hello. Two capital gain are there. One is short-term capital gain, long-term capital gain. Short-term capital gain on account of sale of scientific research asset. For how much rupees you sold? 9 lakh. What is the cost of acquisition? 7 lakhs. What is the short-term capital gain? 2 lakh. Easy. Coming to long-term capital gain, man. Sir, you are having a land which has been compulsory acquired by land, sir, government. For that, provisions of 45 subsection 5 will be applicable. Am I right? Compensation received will be the full value of consideration. Accepted. Less cost of acquisition or index cost of acquisition. The cost of acquisition is 2,50,000 divided by CII in the year of acquisition into CII in the year of transfer. You will be getting index cost of acquisition, right? So you will be getting long-term capital gain of 8,50,000 So the exempt under section 54D, since you have acquired an industrial plot within how many years? 3 years. You are entitled to claim exemption under 54D. Hence you claim the 7 lakhs. So the taxable long-term capital gain is 1,50,410. So two capital gain, short-term capital gain, long-term capital gain. Have you all understood? Coming to IFOS, man, I'm having IFOS income. Winning from lottery, net is given. I have to make it gross. Hello? 67,500 is the gross. Interest on enhanced compensation, 1,05,000. But on that 1,05,000, flat 50% can we claim it as a? Only balance will be taxable. So 52,500 can we claim it as deduction. So 67,500 plus 52,500 comes to 1,20,000 is the IFOS. Are you all really with me? That's it, man. All the 5 heads I have done. Sir, salary, house property, PGBP, capital gain and IFOS, I will be having gross total income. Only one section is there for the chapter 6A deduction, which is interest on electric vehicle. Sir, when that loan has been sanctioned? 1/7/2024. As per section 80 EEB, not allowable as a loan sanction after 31/3/2023. The cutoff is loan should be sanctioned within 31/3/2023. Then only you are entitled to claim chapter 6A under 80 EEB. That's it. I finalize the total income, right? Now I have to calculate the what payable? Tax payable. Sir, is there any special income included in the total income? Long-term capital gain, right, sir? Sir, for that long-term capital gain of 1,50,410, have you enjoyed the benefit of indexation? Yes, sir. Tax rate at the rate of 20%, 30,082. Right, sir? Winning from lottery, as we all know that the tax rate applicable will be. So on the winning from lottery, 30%, 67,005. What is the gross winning? What is the gross winning? 67,500. 67,500 into 30%, 20,250 is the tax. Right, sir? So what is the total income we got? Sir, total income is 41,15,210. Are you all really with me? So from the 41,15,210, if you exclude 1,50,410 and if you exclude 67,500, you will be getting the normal income, right, sir? So 41,15,210 minus 1,50,410 minus 67,500 comes to 38,97,300. Is this guy traveling through optional tax regime or default tax regime? Optional tax regime. Hello, sir. Up to 2.5 lakhs, 2.5 lakhs to 5 lakh, 5 lakh to 10 lakh, more than 10 lakh, we have to calculate the tax payable. Am I right, sir? Is the total income exceed 50 lakh? No. There is no surcharge headache, man. Add health and education cess at the rate of 4%, you will be getting the tax liability of 10,73,300 is the tax payable. Are you able to appreciate? That is the next question from the computation of total income. My dear lovable students, I always used to say that you have to set a time. You know, this is a past exam 15 mark question. Take your calculator. 15 into 1.8 comes to 27 minutes is the allowed time. You have to set your timer right. 30 minutes you have to sit and write. If you are just saying that, okay, this is added back, that is added back, this, that, sir, that I can do, you can't do because you are going to write an exam. Sir, I am going to explain in class. My explanation can be reading and underline is enough. But if you want to complete the question within 30 minutes, you have to practice within 30 minutes. So start your preparation, man, my dear lovable students. Set that time for 30 minutes. Complete it and update me that I have completed within the stipulated time. Then only you will know the real pain of doing a question within 30 minutes. This is what the value addition to the next question, computation of total income. I am comfortable getting a good grip from your heart. Anybody is there? Where is the grand clap? Sir, very, very, very happy morning to all. Happy afternoon to all and happy evening to all. So we are moving into the sixth question of the computation of the total income. This area will come for 15 mark in exam. Don't be ignorant. Mrs. K, a resident individual, sir, aged 62 years, a qualified medical practitioner. She runs her own clinic. Income and expenditure of Mrs. K for the year under 31/3/2025 is as under. Sir, for a doctor, consultation fees is PGBP income. Am I right? Salary received from True Care Hospital should be taxable under the head income from salary. So this is an impurity for the PGBP head. Am I right? Remove the impurity and show it under the head salary. Rental income from house property is an impurity for PGBP and should be included under the head IFHP. Right, sir? This should be reduced. This should be reduced. Dividend from foreign company, sir, is an impurity for PGBP, should be taxable under the head IFOS. Are you all really with me? That means I have to exclude these three income. Normal adjustment only we would have settled by this time. To salary to staff, generally allowed. Administration expense, generally allowed. Rent of clinic, generally allowed. Conveyance expenses, generally allowed. Fuel and power, generally allowed. Interest on housing loan is not allowed because it's not a business expenditure, right? Should be added back. Interest on education loan for son should be added back because it's a personal expenditure. Amount paid to scientific research under section 35. This is contribution to outsiders. You have to check default tax regime or optional tax. If the regime is default tax regime, should be added back. Are you all really with me? Because under default tax regime, contribution to outsiders are not allowed. They have given the net profit. Super, sir. Addition information. She is working part-time with True Care Hospital Private Limited. Her salary details are as under. Basic pay 85,000. Transport allowance 5,000 rupees per month. Right, sir? Total 90,000 per month. Calculator. 90,000 into 12 comes to 10 lakh That's what credited in the P&L 10,80,000 rupees, right? I have to remove it and I have to show it under the what tax regime? Sir, under the head salary. Then I have to check under what tax regime she is moving. Whatever may be the tax regime, basic pay will be taxable. Whatever, sir, may be the tax regime ille. Sir, helper allowance, academic allowance, traveling allowance, daily allowance, uniform allowance and conveyance allowance are exempt under 10 subsection 14 under the optional tax regime. Right? Whereas under the default tax regime, helper allowance is taxable, academic allowance is taxable, traveling allowance is exempted, daily allowance is exempted, uniform allowance is taxable, conveyance allowance is exempted or taxable? Exempted. Hello, sir. So you have to choose it. This is transport allowance. This is not traveling allowance. Taxable. Are you agree with me? Further, during 24-25, her son had undergone a medical treatment in True Care Hospitals Private Limited. What of cost? Free of medical facility. Medical facility can be availed either by the employee or by his son. That is allowed. Hospital would have charged a sum of 1,60,000 for a similar treatment to what patient? Unrelated patient. That means, my dear lovable students, in that hospital only she is working. The hospital where she is working got the medical treatment for his son. Right? Sir, this is not a taxable perquisite. This is a tax-free perquisite. Are you agree with me? She owns a residential house. The reconstruction of the house was started on 1/4/2024 and was completed on 30/9/2024. In our year, modal 6 masam. After reconstruction, ground floor of the house is self-occupied by her, whereas while first floor was rented out since 1/10/2024. For the next 6 months, one part of the house has been let out. Both the floor of equal area, 50-50%. Monthly rent is 40,000, but you won't get the rent for 12 months. You will get rent only for 6 months. The tenant also pays 3,000 per month as power backup charges. That means total 43,000 she is collecting. Are you agree with me? 40,000 in the name of rent and 3,000 in the name of maintenance. She took a housing loan of 25 lakh for reconstruction on 1/4/2024. Interest on housing loan for the period for the used 6 masam was 1,20,000. And for the next half was how much lakh? 1 lakh. During the year, she also paid municipal tax for 5,000 for the last year and 5,000 for the current year. LT bar MT paid by the owner. So whatever you paid can be claimed as deduction, even if it is relating to last year. Are you agree with me? Other information. Conveyance expense include a sum of 48,000. Incurred for what? Conveyance. House to True Care Hospital Private Limited and vice versa in relation to her what? Employment. So from house to go to the hospital, sir, from hospital to return back to the house, she got conveyance allowance of rupees how much? 48,000. That's what conveyance expenses. Look, in the P&L account, conveyance expense is there. Inside that 48,000 is there. That is allowed under PGBP, right? Power and fuel expense include a sum of 10,000. Incurred for generator fuel for providing power backup to the what? Tenant. Tenant. That is PGBP or IFHP? IFHP. So inside that power and fuel is there 1,44,000. So this 10,000 should be added back, and that cannot be claimed as deduction under IFHP also. That's why ad hoc 30% deduction they are giving. Administrative expense include an amount of 10,000 paid as municipal taxes paid for her house should be, because that is IFHP impurity, right? Clinic equipment details are opening WDV of the clinic equipment are rupees how much lakh? 5 lakh. For that, claim depreciation at the rate of 15%. And fresh purchase made on 28A, 75,000, which is paid in cash. No depreciation under section 32 because it has not been paid by account paycheck. Are you really with me? She also paid tuition fees of 40,000 for her granddaughter, which has been debited to her what account? Capital account. For tuition fee, you can claim deduction under ATC. She availed a loan of 25 lakh from bank for higher education of her son. She repaid principal of 3 lakh, no deduction. Interest of 1,56,000 for 80E, interest on higher education during the previous year. You are entitled to claim deduction. You are required to compute the total income and tax liability of Mrs. K for the assessment year 25-26, assuming she is not opting for the provision of 115 BAC. That means she want to travel only through the optional tax regime. Can we? I'm finding out income from salary, man. Look, man, this is income from salary. What is the basic salary she's getting? 85,000 into 12, 10,20,000. Accepting? Transport allowance, man, 5,000 into 12. It is fully taxable because helper allowance, academic allowance, traveling allowance, daily allowance, uniform allowance, and conveyance allowance. Only that is fully exempted under section 10, subsection 14 to the extent of what you are spending, right? This is transport allowance. Hello, sir. Fully taxable. She is not blind and all. Are you agree with me? So entire 60,000 is taxable. Cost of treatment for son in True Care Private Limited. It is exempt since value of medical treatment provided to an employee family member in any hospital maintained by employer is excluded from the definition of perquisite. Sir, medical facility can be provided either in India or outside India. In India, 3 places fully exempted. Number 1, government hospital, employer hospital, or CIT approved hospital. This is whose hospital? Employer's hospital. Hence, it will not be treated as perquisite. Are you able to connect the provision? You will be getting gross salary 10,80,000 rupees. Since she decided to travel through the optional tax regime, standard deduction will be 50,000. So the income from salary will be 10,30,000. Good. Are you falling into the discussion? Income from house property. Sir, actually 2 houses are there. 2 parts are there. Number 1, let out portion first floor and self-occupied portion ground floor. Right? First, I am coming to let out portion. It's a 5-step approach. Gross annual value, less LT bar MT paid by the owner, net annual value, less deduction under section 24A, less deduction under section 24B, you will get the IFHP, right? Gross annual value, actually rent received is how much, man? 40,000, right? 40,000 only for 6 months. Because in entire 12 months, first 6 months, it went for construction period. Next 6 months, only let out period, right? So 40,000 into 6, 2,40,000. I don't have the details of fair and or municipal value, whichever is higher or standard and whichever is lower. Those details are not given in the less municipal tax paid by her. Actually, total 10,000 rupees totally paid, right? 10,000 has been paid for the entire year. That is last year 5,000, current year 5,000. Total 10,000. That is for self-occupied portion and also for the let-out portion. So half of 10,000 is can be claimed for the let-out portion. Easy. So NAV is 2,35,000. Now deduction under section 24A and 24B. 30% of 2,35,000 is 70,500. Right, sir? IOBC, my dear lovable students, what is the total interest on borrowed capital? First 6 months, how much? 1,20,000. Second 6 months, 1 lakh. So 1,20,000 plus 1 lakh, 2,20,000 divided by 2. Are you ready with me? Comes to 1,10,000 is the IOBC. Sir, total income from house property. Satisfied with the LOPE? Coming to the SOAP, man, we know that GAV is nil, less LT bar MT, not applicable. NAV is nil, less deduction under 24A. Since NAV is nil, 24A will not be applicable, right, sir? Going to 24B, man, 24B, let me ask you a question. First 6 months, 1,20,000. Next 6 months, total 2,20,000. Divided by 2, 1,10,000, right? Let me ask you a question. Sir, 3 conditions should be satisfied in order to enjoy the higher limit, right? Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition. Construction or acquisition. Construction or acquisition. She wants a residential house. The reconstruction. Re. If you don't, sir, note that exam will be re. Right, sir? She is not entitled to claim higher limit of 2 lakh. She is entitled to claim only 30,000. Are you all with me? So you are having 54,500 rupees income from let out portion, 30,000 rupees loss from self-occupied portion, 54,500 minus 30,000 comes to 24,500 is the income from house property. That's what I have finalized, 24,500. Easy. Coming to the real hero man, PGBP, my dear lovable students, profits and gains of business or profession. Tell me what is the net profit? 55,34,000. Less, sir, impurities. Salary income should be taxable. Already be taxed under the head salary. How much, man? 10,80,000. Rent should be taxable under IFHP. Remove 2,40,000. Dividend should be taxable under IFRS. So this much impurity is there. So my subtotal is 41,54,000. Accepting? Less allowable deduction. Sir, can we claim depreciation, sir? on the opening WDV, since it has been put to use for more than 180 days, I am entitled to claim 15%. So 5 lakh into 15% comes to 75,000. Since the addition has not been paid by specified mode like account pay check, account pay bank draft, electronic clearing system, or such other electronic mode as may be, since it has been made in cash, section 32 benefit will not be available. So the total depreciation will be 75,000. Subtotal paka. Add items of expenditure not allowable. You tell me, interest on housing loan, can you debit it to P&L? It's a IFHP impurity, man, should be in the back. Interest on education loan for son, it's a chapter 6A item, man, cannot be debited to P&L account, should be in the back. Conveyance expense in relation to her employment with True Care Hospital, debited to what expenditure? Income and expenditure. Look. Very, very important. This is the only twist in the question. Every student may go wrong in this point. Read, man. First point. Sir, conveyance expense include a sum of rupees how much? 48. Incurred for conveyance from house to True Care Hospital and vice versa in relation to her employment. Who's this guy? Whose P&L has been given? Mrs. Kashi. Mrs. Kashi is not True Care Hospital. In Mrs. Kashi, hello sir, Mrs. Kashi is working in True Care. She is having own clinic also. Understanding? To go to that clinic, she is incurring some conveyance expenses. That conveyance has been debited to her clinic P&L. Allowed? Not allowed. Are you all really with me? This consultation fee is own clinic income. These all are own clinic expenses, right? This conveyance expense include expenses to earn salary income. Are you all really with me? That can be claimed as deduction under that salary, but under that salary there is no such provision. That's why they are giving standard deduction of 50,000 rupees or 75,000 rupees as there. Are you understanding? Sir, now you read, conveyance expense include a sum of 48,000 incurred for conveyance from house to True Care Hospital Private Limited and vice versa. Let me ask you a question. Is True Care salary income or PGP income? Salary income. But sir, PGBP's own practice income, right? So salary income expenses cannot be debited to the PGBP. Concept clear? That's why it should be what back, man? Added back. In the Uri edathila, sir, there is a high chance that very important point. So conveyance expense in relation to our employment with True Care debited to income and expenditure account should be added back. Power and fuel expense incurred for providing power backup to tenant. Anyway, IFHP impurity should be in the back. Municipal tax paid relating to residential house. Anyway, PGBP impurity should be in the back. You will be getting profits and gains of business or profession. 45 lakh 23,000. Easy. That's it, man. There is no capital gain. I will tell you one shortcut. 99.99%. Salary house property PGBP is there. Capital gain won't be there. Hello? If you see the question, the pattern will be like that. If they tested salary, they tested house property, they tested PGBP, then they won't test generally capital gain. If you see the question, ICAI used to test like that. Sir, can you finalize the IFOS, man? I'm moving into the income from other sources, man. Sir, power backup charges from tenant, 18,000. Hello, sir. Hello, sir. Less actual expenditure incurred for providing power backup, 10,000. 8,000 is taxable under the IFOS. Sir. Have you let out the building or land to get the power backup? No, sir. As per section 22 of the Income Tax Act, in order to tax an income under the head income from house property, 4 conditions should be satisfied. Sir, assessee should be the owner of the building. Owner of the building. Owner of the building. Hello, sir. And land or land appurtenant thereto. And that building should be let out. Hello, sir. And that building should not be used for his business or profession. Are you all really with me? Here, what I let out? I let out power backup charges. That means power backup is not land and building. Power backup means I'm having a generator. That generator has been fixed in the premises where I have let out and I'm collecting charges. You tell me now, is it an IFHP income or IFOS income? That's why that power backup, sir, 3,000 into 6 months. Why only 6 months? Only second half I have let out. Sir, for this actual expenditure incurred is 10,000. This is a second catch of the question. Some people will take this under the head income from house property. Some people will not take at all. Or some people will rightly take this under IF. Oh yes, but they will forgot to reduce this 10,000 rupees. Entire 18,000 they will take. Are you having clarity? Dividend from foreign company. No, sir, big thing. Sir, IFOS 68,000 rupees. That's what I'm classifying. I'm writing, man. 68,000. That's a gross total income. Done, done. Is he traveling through optional tax regime? He is entitled to claim Chapter 6A reduction. Finalizing Chapter 6A under the ATC. Hello, sir. Tuition fees paid for what children? Grandchildren. Grandchildren na? Marumagal. Pera pasanga. Right? That means my sons or daughters, kids. Hello? Sir, you are entitled to claim deduction under ATC for own children, not for the grandchildren. Look, what is Amma's voice? What? 62. This is not Amma, this is Party. Party paid for Kuti. Hello, sir. Since Party paid for Kuti, sir, that will not be allowed as a deduction. Look. Point number, you tell me. She also paid tuition fee of 40,000. Sir, grounded. For her, what daughter? Granddaughter, which has been debited to her capital account. Not entitled to claim deduction under ATC. Hello? Party, for you know ATC. Deduction under ATE. Sir, interest on loan taken for what education? Look, of her son. Party not spend for Kuti. Amma send for Payan. Are you really with me? Hey, for her son, she is not Party da. She is Amma. Sir, Amma is deductible. Hello, sir. But principal prepayment, not deductible. Only interest is allowed. So 1,56,000 can be claimed as deduction. Chapter 6A, man, 1,56,000. Can we finalize? That's it. The total income is 54,89,500. Now we have to calculate the tax payable. They want tax also. Can we calculate the tax payable? There is no special income and all. Only normal income only. Sir, 54,89,500. You tell me, my dear lovable students. Default tax regime, optional tax regime. Optional tax regime. Amma's voice. 62. Party. Correct. Up to 3 lakh rupees, no tax. 3 lakh to 5 lakh, 5 lakh to 10 lakh, more than 10 lakh. General tax rate only. Hello. What was the total income? Oh, 54 lakh. Total income exceed 50 lakhs. Party is liable to pay surcharge at the rate of 10%. That what surcharge at the rate of 10%. Accepting on that subtotal pay health and education at the rate of total tax liability 16 lakh 66,636 will be round off to 16 lakh 66,640. Super fantastic outstanding question. Are you all really with me? Yes, sir. Are you getting the flow of how to deal with the computation of total income? This part will come for 15 mark in exam, my dear lovable students. You know, this is our ethanadu question. Sixth question. I have said one thing. Till question number 7, minimum 7, for certain students 10. Don't do the auditing. You have to sit and do. If you are sit and do, my dear lovable students, you will be feeling so much comfortable with regard to the computation of total income. You will learn lot of things. Certain things will be new only. Sir, you would have not studied at the earlier time. No problem. Through computation of total income, you learn that, okay, party will not get the deduction. Okay, fine. Let it be. If the same question, same adjustment, same has been tested by ICAI in different form, we will be awake. Okay, fine. Party. No deduction, party. Amma, there is deduction, Amma. Are you all really with me? Like that, we are applying the provisions into computation of total income. Sir, complete this and update me from your heart. Anybody is there? Where is a grand clap?